All right. Good morning. Hope everyone's doing well. Let me know if you guys can hear me okay. That'd be much appreciated. And if you guys could see everything okay. Just give me a 1 in the chat. All right, appreciate you, Tony. All right, well, with that being said, if you guys have any issues or things start to look like less than ideal, let me know. If you can't hear me fully, let me know. Right, I wouldn't want to do a whole video, whole live stream if something pops up as an issue. All right, so yeah, like I said, hopefully you guys were safe last week. Didn't do anything crazy. Things that we wanted to see price do pretty much took place. When we get to the indices, we'll talk about what's transpired. But as always, the first thing we do in the list of things that we do on Sundays to prepare for battle in the coming week, we got to look at the economic calendar, right? We think of Power 3 relative to the economic calendar. Later on, we will talk about the bonds and yields, interest rate analysis. We'll take a glance at COT and seasonality one more time. And we'll do intermarket relationship analysis between the DXY, the indices, and foreign currencies. And maybe we'll look at gold and silver, some of the commodities as well in this call later on. So stick around for that. But yeah, so again, the first thing that we do obviously is we look at the news events. Clearly, the one thing that stands out is going to be CPI. Okay, when it comes to red folder events, NFP, FOMC, they're generally two-stage news events, and generally they'll have one news event right at the open, or sometimes at 5:30 a.m. Pacific Standard Time, an hour before the actual open, and then it sometimes can have a news event later on as well. So if that's the case, and that's what you see in terms of the news schedule, NFP and FOMC are a two-stage news event. So the first move will generally be a fake move. And then the secondary move that comes later on generally can end up being the real move. It looks real enticing sometimes, right? The initial move may rip off, go and attack, sell side if it's going to go higher. For the first news event, and then later on when the second news event comes out, or somewhere close to that, it'll pretty much whip back in line with what it is going to do in the higher time frame, right? So it's a two-stage event. It pulls people in, then it rips your face off. CPI, that is more of a one-sided news event. Something really important to realize too about these news events when you're thinking in terms of the monthly range, you got to realize that these news events are like kill zones for the higher time frame. Okay, so if a big move is going to happen and you're trying to time it on the higher time frame, generally it's going to require a news event, similar to how the lower time frame uses macros in terms of timing to position people with the fast-paced portion of the delivery. Okay, price is fractal. Right, so if there's macros on the lower time frames, you could look at the news events as macros for the higher time frame. Okay, there's specific times when things take place, as you guys should know by now as ICT traders. But this observation is something that I observed like 2 years ago in terms of using the news events, the red folder, yellow folder news events with higher time frame delivery to time when things are going to take place. A student of mine named Mark, or Bullfrog in the private group, for those of you that know, he basically was talking to me about what the role is within the monthly range. Like, what role does the news events take, right? Like what role do they play, right? Within the manipulation, consolidation, manipulation, distribution phase, right? Or Power 3 for the monthly range. And it's a very fascinating study because you'll see fairly quickly that the news events, when you look at the higher time frame within the grand scheme of like the monthly chart, you could see how these news events are generally times when price is either going to disrespect and completely reverse away from the higher time frame direction, or it'll be a situation where it sets up the move in terms of timing for that higher time frame expansion within the monthly range. Okay, so that's a good study to do, right? Keeping this in mind, going in to your charts and intentionally studying to see what role the certain news events play within a monthly range. It's something I encourage you guys to do. It's just another one of those layers to price navigation and understanding timing. Okay, and then of course you can hopefully put two and two together as far as why it would be important. Because if you want to get in line with big moves, there has to be institutional sponsorship. And the timing element of that is very, very important. So you don't get caught in the manipulation phase of things, and you could ride out the larger moves eventually if you're looking to hold trades a little bit longer in the future. All right, so yeah, let me know in the chat if you guys have ever considered that. If you guys have ever thought about that. Maybe you guys have thought about it. Good morning, Nutty Fafa. Good morning, everybody. But yeah, have you guys ever heard anyone mention this, like in this context, like using the news events in the terms I just mentioned strategically? Let me know in the chat if that's ever been something you've considered. I've talked about it before on the channel, but maybe this is your first time, or maybe heard it from someone else. If you did hear this from somebody else in terms of how we're viewing the news events, send me their Instagram so I can connect with them about it. Because I don't see anybody teaching this. Like this perspective, not even ICT has ever mentioned this. Like this way of using the news. Obviously, my perspective has been derived from ICT, but he's never put it in terms like this. Just like our liquidity mapping, he's never came out and basically said this list of liquidity pools are the things that will be used, either one or multiples of them, for setup liquidity and targeting liquidity on a daily basis. First time thinking about it this way. Okay. Nice, Yasin. I'm glad. Sniper on Instagram does it in a similar way. Okay. Send me his Instagram. I'd love to connect with him. Because again, this is something that most people don't think about. They don't think about things in this way. It's kind of a very similar lack of thinking like us across the board with all different concepts. But yeah, maybe we can connect with him. Maybe I can get on a live with him if he has a YouTube channel, and we could see what his perspective is. If you guys know any traders that you'd like me to connect with or bring them on to the channel, definitely give me recommendations too. I have a handful of people that I've been in talks with, some traders that helped me along the way, and some bigger names that all of you guys know. So yeah, we will see what I could set up eventually. But yeah, so given the fact there's CPI on Tuesday, there's no news Monday and Sunday, or Wednesday, we got to, again, think about Power 3. If we want price to do something spectacular, we have to be trying to position ourselves around these times. Because when there's no news, but there's big news, right? When there's no news on a couple days, but there's a big list of news events still taking place during the week, you want to just keep in mind that the days that don't have news may be part of the manipulation or present you with different characteristics that may try to fool you, try to get you thinking the other way or getting away from your thinking entirely overall, so then it could be weaponized against you. All right. So because CPI is on Tuesday, that may be when the higher low for the week is formed. Okay. And then when we get into the charts, obviously we'll try to piece together different scenarios, and we'll talk about what we favor as always. But as you guys know, we go step by step. There's a way that we've been able to be consistent for the last 8 straight months live on YouTube in the last 3.5 years in my private group. It's, all these different elements are important. If you're missing one piece of the process, you're kind of missing information, and you could be fooled. You open the door for yourself to be convinced to take the wrong side or take bad decisions. And again, just as timing is important on the lower time frame, it's just as important when it comes to the higher time frame. Why? Because price is fractal. So the same principles happen. It just varies a little bit from time frame to time frame, given the different perspective, right? So yeah. So before we get started, do you guys have any questions about anything specific? Maybe you had a question about things during the week, or maybe something that I've just mentioned here. If you guys could leave your questions in the chat, depending on how complex it is, I will either answer it here or, make it part of the lesson, because other people probably have the same questions. So yeah, if you guys don't have any questions, we will move on. And then if I see your question later, I'll address it. Okay. So as always, we begin with one of the most influential asset classes on the indices, or compared to the indices, which is the bonds and yields. Okay. So first and foremost, we will start here on the yields. Those of you that have been with me for a while, those of you that come every single week and join the calls with me and listen to what I have to say, you guys should know by now that the yields generally will dictate or have a high impact on what the DXY decides to do and what's trustworthy in the DXY. It's opposed to the indices, and it's opposed to foreign currencies, and its behavior should also be opposed to the bonds. Okay, and the bonds do the opposite. Okay, the bonds influence what the foreign currencies are going to do, and positively, and it also impacts what the indices are going to do. So there's a reason we start here, and some people don't like it. They want me to just jump to NQ or whatever asset they want me to observe. But that's the thing, we got to build a narrative. This is part of building the narrative so that we can be in line with a large amount of time, right, in terms of direction, like I've showcased this year. It's been almost 8 straight months that we've been able to be on side, live, in front of people with the higher time frame. And then that's obviously resulted in high 80% strike rate, which I've proven as well this year through Top Step when I was passing that funded account, showing the dashboard. Okay, so there's a reason why this is so important, and there's a reason why I don't make 5-minute videos on Sundays, because there's a lot of different elements, and I try to get you guys clarity, because that's the goal, And then once you get clarity, once you have a process you could trust, or a process to study, then eventually trust, that opens the door for whatever else you're trying to accomplish. And it sets you apart from everybody else, because most people are just looking at one asset, and that's all they're looking at, because they feel like they shouldn't be concerned with other stuff, as if everything is individual, when it's not. Everything's connected. So if something happens over here, something's going to be impacted over there. Okay? So that's why we spend so much time here. Okay, so let's actually scrub over to the monthly chart for the yields here. It's still in a wedge looking thing, so I wouldn't be surprised if something dramatic does take place. It may wait till September, because that is when the next interest rate conversation takes place. If we go over here, gonna move a little bit lower, go to September. See, so September 17th is when the next interest rate conversation will take place. There is apparently like an 80% likelihood, high 80% likelihood at least, that there's going to be some type of adjustment. So I wouldn't be surprised if the bonds and yields, given how they've been kind of messy since January, simply because people just don't know what was going to happen. There was uncertainty because it was going to be so many changes. So that may be a time when this finally opens up. Ironically, too, September starts the fourth quarter. Okay, and then so from September to December, that'll be the whole fourth quarter, and then going into mid portion of December, that's when we will then transition to the first quarter of next year. Okay. So yeah, with that being said, we'll keep that in mind. But looking at price, we're gonna start from where we always start on Sundays. Okay, where I encourage you to start on Sundays, which is obviously the monthly chart. Okay, you can go to the quarterly chart, right? The 3-month chart. That's obviously some of these levels, right? If we go to the quarterly chart, all you got to do is identify close liquidity, right? So current and previous highs and lows from the previous candle, because this is a 3-month time horizon. So it may take a while to get to these levels, but if we do find reason to reach for one of the levels, right, you could reasonably see how you may be able to get in line with the proper narrative on a month-to-month basis, like a large span of time overall. Okay, that's the same with every asset, not just this asset, right? But you could see how we've been basically hovering above this order block in here, which is why I have it labeled, right? So there's still a chance for it to continue. It's got equal highs up there. If we look at, let me actually clean some of this up. Right, so we do our little observations in here. We could see, first and foremost, like I said, to keep it simple and organized for you guys to have a process to employ right away. No matter what asset you're on, no matter what higher time frame you start on, the current candle and the previous candle, especially if you're on the quarterly, monthly, and weekly chart, the previous and current candles high and low, especially if we're trading close to the previous, you want to make sure you mention those or have them on your chart, so then you could transpose them to the lower time frame. Okay, because that could be a draw on liquidity for the month, for the week, for the quarter. Okay, especially on the quarterly time frame, because it's so far away when you're on the lower time frame, but that may be what's pulling price in a particular direction on that daily or weekly chart. Okay, so it's another layer of clarity building tactic to be able to stay on the right side of the market for a long span of time. And then, of course, you mix in some of the fundamentals that we talk about. The interest rate analysis is a fundamental analysis concept, but it's kind of also like mixed with intermarket relationships because of the relationships they have with the other assets. But yeah, I hope this is easy enough, right? The first thing you do, look at the news, come to the bonds and yields. You look for the current high in the higher time frame you're looking at, right? I already kind of had the quarterly outlined. Let me actually move. No, that's actually correct. So, and price is obviously going higher still. So we would put the quarterly high, previous, any previous PD arrays that are in close proximity to where price is currently at. And then we obviously would do, or keep in mind, the quarterly low from the current quarter, and then of course the previous quarter, just in case price wants to prove that it wants to test some of those levels. Okay, so after you do that on one time frame, right, that's pretty much all you really need to focus on. And then if you go to the monthly chart, you scrub down a little bit, you can start to get a little bit closer to where price is currently at. Okay, we do have a wick in here. We do have a wick in here. So price is going to have to break to the buy side, breaking through some of these levels in order for us to think that we're ready for a near-term expansion to take place. Keep in mind also that small ranges lead to large ranges. So since we have a lot of small ranges, we're due for a pretty sizable displacement wherever it's going to decide to go. We see that buy side was taken here on the 10-year. Sell side was taken here. So if you measure that low to high, because it's the current or most recent fractal high and low that took buy side liquidity and was aggressive, basically encapsulating all this price delivery. If you go from that low to that high, you can get equilibrium. Okay, we're hovering at equilibrium. Those of you that have been diligent, watching and listening to what I've been trying to get you guys to do and focus on, You guys should know by now that if we're on a higher time frame and we're going sideways within a range, right, hanging around an equilibrium point, that is indicating that we're in a consolidation. So when you're in a consolidation, obviously you have to operate with caution, okay? But because it's there in consolidation, it could continue to hold in consolidation until it breaks out. That equilibrium point will potentially be not only used to hold price like it has been, but when price decides to break out, that level is going to be very sensitive and pretty much be the anchor point that sends price outside of the range when it does decide to displace. This is not only true on this time frame for higher time frames, but it's also true on the lower time frame. Okay, so the principle is transposable. It can go down to the lower time frames as well and be used in a very pretty much the exact same way, just on a more fast-paced scale. And of course, the way you don't get lost is by keeping yourself rooted in what this higher time frame is doing. If the lower time frame looks shitty, you want to make sure that you are aiming to stick with the higher time frame. Okay, like you'd move up, right? If the 1 minute not making any sense, go to the 5 minute. 5 minute doesn't make sense, move to the 15 minute. 15 doesn't make sense, maybe you're still stuck, move to the 1 hour. If that doesn't make sense, focus on what the daily chart is doing, or the 8 hour or 4 hour, and then try to trade in that direction that makes sense on that time frame, because eventually the lower time frame will catch up to what the higher time frame is doing. It's just painting more details and intricate movements that are creating that higher time frame delivery. Okay, and again, the higher time frame is where the biggest gravitational pull is when you're thinking about these time frame to time frame analysis within all these assets. Okay, so it's eventually going to gravitate to that higher time frame. But yeah, like I said, we went from the quarterly to this monthly chart. So just like we did on the quarterly chart, how we got the current high and previous high, current low and previous low from the previous candle and current candle or range, right? You also got to do that here, right? Because if this weekly chart is going to deliver to this quarterly high or deliver to the quarterly low, whichever one it reaches for, it's going to have to break through this low if it's going to go lower and reach for something down here, or if it's going to break up here, it's going to have to break above this high in here. Okay, this is a current monthly candle and we just started, so these are previous days highs and lows, or previous, I think it's like previous week's high and low, because there's 4 weeks in a monthly candle. Okay, so it's not fully created yet, but this one was. So if it's going to go lower, again, a really ideal target, if it is going to gravitate lower, it's going to be this monthly low, even if you're trying to target something that's further down the line here. Okay, it's just the way it is, right? If this was a 1 minute candle, no matter what it's trying to do, it's going to have to break through this previous candle, right, the high or the low, because that's just the way it is. And this is something that people don't really grasp onto. It's a very obvious thing, but if you understand what I've just mentioned, you'll start to see how powerful this is for bias and narrative. Because who cares whether price is going to go all the way down here if we're currently trading up here? Before price gets down to that level or up to this level, it has to break through earlier things. So if you're trying to assume bias and narrative, and maybe this is your overall view, like you want it to go up here to the buy side up here, you still have levels of liquidity based on the liquidity mapping list that I give you guys, that has to be taken before it gets up to that level or down to these levels. Okay, it's something that hopefully seems obvious, but it's something that you probably never considered. A lot of students that come to me when we're talking about bias and narrative, a lot of them don't even consider this very simple piece of obvious information. And it's like overcomplicating things, right? When we overcomplicate, it's a very common thing to overcomplicate this way of trading or just trading in general. As a new trader, because we don't know what's important yet, but that's why it's invaluable to have somebody that's willing to teach you like I do, or have a community that's also awake to this type of information, and has some experience, helps pull you through some of the pitfalls that you'll have in terms of your ability to understand what's important as you progress. So that's why this type of community and what I do is very impactful to many students, So yeah, Hopefully you guys will be getting value. If you guys get value from the content, you support what I do, please don't forget to like the video, share the content, subscribe to the channel if you haven't already. It does a lot for the channel to be able to reach people just like you guys. And you help me on my mission in trying to help people, as many people as I can. There's no limit. There's no target for how many people I want to help. But, I've seen a lot of progression from many students, like, for example, Mike, Tony, Nutty Fuffa in the chat. They've seen a lot of progress just by being here because we point out what's important and it's not overcomplicated. Okay. Good morning, Mike, by the way. Appreciate you hopping on, brother. One of my private group students. Get ready for the work. Okay. Yeah, Mike, if you can't stick around the whole time, it's okay. Maybe we can hop on a call later. I got some one-on-ones to do today with some of my private group students, so I'll be available today, most of the day, Monday and Tuesday, and I'll be free all day on Wednesday for any of you guys in my private group that need one-on-ones. So yeah, hopefully I can answer most of the possible questions though today within this call. But yeah, so hopefully this process so far makes sense. This is where we start all the time. It's not overly complex. You don't hear me trying to sound smart by overcomplicating things. We just have a very organized process that's to the point and highlights what's important right now. Okay, and that is on any higher time frame you look at, it's the current high and low, previous candles high and low, and any close proximity PD arrays that are reasonable to potentially be targeted. Those get labeled too, like the quarterly order block. We also have this bullish order block here. If price was to close above it, that would trigger in this to be a bullish order block. And then that would be part of our invalidation levels in terms of price trying to hold. If it broke above this, we would want to see this wick here hold as well because it's also an order block on the quarterly. So the mid portion, the order block, and the swing low would then turn into our invalidation levels, assuming that we would like to see price go higher. If it was to break above this, those would be our 3 PD arrays, and that's how we validate whether price is going to hold and continue in a specific direction, or if it's going to break down and start turning around and going the other way and force us to be flexible. All right. I've gotten a lot of good feedback on that concept, that topic as well. ICT mentioned 3 PD arrays on one video, I think in 2023. Most people, it went over their head because they're looking for what they're trying to hear him talk about. And hopefully more of you guys employ this tactic on the higher time frame to help assist you in holding on to a directional bias or a narrative, because it is extremely important. And when we talk about the indices, we're going to talk about that concept further. And you're going to see just how powerful it is to stick to the higher time frame and use these concepts when you're on the higher time frame to further solidify your ability to hold on to a particular opinion. Okay. So yeah, like I said, I hope that this has made sense so far, right? So our current liquidity, our current idea in this has to do with price still continuing to go higher. It has failed to break this high, and we are creating a small range. Small ranges, like I said, lead to large ranges for the most part. So we're expecting soon for price to break out. Where is it going to break out? Obviously, we're going to have to wait and see. But given the overall structure here and the fact that 3 PD arrays have not been violated to the downside, at least for the time being, on this perspective, it looks like price is still going to want to favor buy-side delivery. Okay, we're also inside of a quarterly bullish order block. Not only that, we look at this monthly chart, we're actually within a monthly bullish order block that overlaps the quarterly bullish order block. So again, we're going to need some serious displacement to the downside, breaking through some of these lower validation PD arrays in order for us to be flexible and then target things like this, for example, or this wick, for example. Because if it proves that it wants to go lower, right, not only do we have each previous monthly candle's low to target for liquidity without making things over complex, we also have the wick here. We also have the quadrants here within this monthly bullish fair value gap. Okay, so those could be used as targets as well if it was to displace. One thing, like I just mentioned, that stands out to me is the way that this wick and this wick have pretty much respected the middle portion of this. It traded above this order block and we got above the quarterly order block, but it hasn't really held interest above that. Okay, maybe it is setting up just to retrace, give us a small range, get people doubting and thinking that this is strong resistance, just so they can then displace and finally get above this. I wouldn't be surprised if that is something that ends up taking place. But again, in order for me to really get behind it, because we're in consolidation, because we are inside that equilibrium point from that higher time frame, we're going to have to see price break, right, and start displacing. What do we favor given the structural view at this current moment, at least for the 30-year? We see the price is pushing higher. We can make an argument too that there was an SMT, which there is here between these highs, right? So these highs have an SMT with, here, let me mark it real quick. These highs have an SMT with these highs and these highs. And like I said, there's like a, kind of like a retail pattern showing up, right? So every time you see a retail pattern showing up, you want to consider what ICT concepts are telling you, but you also want to think like, okay, how are they going to be punished? What would price want to do? And, in this case, if it was to, again, displace to the downside, we have pretty clear targets down here. But then again, if it was to displace above, supporting this fair value gap in here, which it currently, at least for the moment, is respecting. If it was to get above that, maybe displace above this high, and then maybe trade back into it, use it as support, those are pretty good signals that price is going to still look to go higher. And again, we also want to keep tabs on the 3 PDA rule, right? So we have this fair value gap, we have this swing low, and then we have this fair value gap in here, right? So that's 3 pretty obvious PD arrays, plus the SMT. So this may be giving early signs that it may want to turn around, right? On the 30 year, it looks like we still need a little bit more information. The 5-year looks a little more convincing that it may look to target down in this level. But again, we're just going to have to wait because we're in this big, massive consolidation. So we go into the week, right? If we have conflicting ideas like this, we want to have our main objective, which in this case, it still looks like it wants to go higher on one of these 3 assets. It's got levels that could support that if it was to break to the buy side again. But we also have our invalidation levels and possible scenarios to paint if it was to support downside. We have contingency plans always, just in case we have to be flexible. But we are strongly on one side in terms of opinion pretty much every single time, even if there is a potential argument for price to go against what's currently happening. Right? In this case, it still seems it's holding bullish PD arrays. So we're going to stick to that until proven otherwise. What proves us otherwise? The 3 PDA rule and intramarket relationships. And if things like this COT get supported by a displacement that looks like it wants to continue to break down, then obviously we'll be able to be flexible and switch our opinion. And we have an overall detailed understanding of, what could get us into a sell side delivery, right? What would support that idea? We now have that painted out for this asset. It's a very similar tactic. Pretty much it's the same tactic that's used for every asset. We're just obviously doing it for this asset for the time being, okay? And again, some red flags that show that we may be looking to turn around, even though this is going higher, is the SMT, the failure to close above the wick midpoints or consequent encroachment. And then, of course, we have the 5-year looking like it may also be disrespecting the downside PD arrays. And if it gets below this fair value gap down in here, we're also below pretty decent amount of new week opening gaps. That's what these gray boxes are. Looks a little less clear and organized because we're on the monthly. But when we go to the weekly chart, you'll see more levels if you have this indicator. And again, if you don't have this indicator, the highlight Sundays, I encourage you to get it because it just helps you, right? Identify the new week opening gaps, right? Sometimes the weekly doesn't really look as clear. But you could go here to like the daily or the 2-day. It looks better on the daily. But you could see each weekly range pretty beautifully depicted, right? So If you're looking for weekly highs and lows, you can either use the weekly chart to identify them, or you can go use this type of indicator and go to the daily, and then you could visually see what the weekly ranges did if you're doing weekly range studies or just want to refer to them for future reference. You could see it very clearly, right? This is the start of one week. This was the end. This was the start of last week. This was the end. Okay, so you easily are able to find weekly highs, weekly lows, and PD arrays within those levels that you could then use later on. Okay, so yeah, before we skip to the daily chart, we'll look on this chart now. Like I said, you go from one time frame, identify the current high, current low, and previous high and previous low on that relative time frame. Then you find the PD arrays that are in close proximity, see what price has been doing in terms of what structurally price looks like it's doing, and then you move down, right, each time frame, and you do the same thing for each of the time frames. Okay, and then like for example, we have this weekly perspective. We have a weekly high and low here within this candle. So the previous week's high was here, previous week's low, or the 2 weeks ago, right? Weekly candle was this high and this low. We also have previously from last week, we have this high and this low. So price is going to open up a new candle within that range. So no matter what we did or looked at on the quarterly or monthly chart, right? No matter what levels we identified, whatever PD arrays we identified, as we drop lower, you get further context and what levels should be taken out before price takes out those larger time frame perspectives. Okay, so if it opens up, which it's going to open up a new candle, right? If it opens up inside this candle, what levels, if this is the time frame we're looking at, which levels should be broken through first and foremost, whether we're trying to attack the lows or the highs, like on this bigger scale? Which liquidity pools are in close proximity, right? If we open up inside this previous week's range, it's clearly going to be the previous week's high and previous week's low. Okay, depending on where it wants to go, right? We're going to still trust that the buy side is still going to be favored just in case it continues. But if it breaks against that, then obviously we have ways to adjust with that as well, based on what we've just talked about. Okay, but nonetheless, right, as you switch down from time frames, again, the first thing you do, where are the close proximity PD arrays? What did price trade to, right? What is it reacting from? Where could it be headed next? And what are the close proximity PD arrays from the last couple weeks? And sometimes if there's a close proximity PD array like this monthly low, you also want to identify that as well, right? If they're close, because that may be used and get targeted. One thing that we can identify after you've basically highlighted what I've just mentioned, the previous highs and lows, right, from the previous candle or previous week, sometimes the previous 2 weeks. You could see that last week, what did it do? It opened up inside this weekly candle, and then it purged the previous week's low. So that was the draw. Not only that, we have the wick in here, and it came to the middle portion of that as well. And they hit that, and then that's the point in which price used to reject. Okay, and then we basically traded back inside the prior week, right? The prior week's range, which obviously you can see now as well that there's this fair value gap here. So if we stay below this and it fails to continue to break through those wicks, like I mentioned, and just continues to look like it wants to go lower, then we could use this as an inversion fair value gap, right, from the weekly chart. Okay. So yeah, does everything make sense in terms of process? I'm trying to be as detailed as I can. Again, we do the same thing, talk about the same stuff every Sunday. So hopefully it's just by default going to just become a part of you. I know some of you guys have given me feedback saying that that's the case and you've been seeing progress, which I'm grateful to hear, because it doesn't have to be overly complex. I can make this as complicated as I want to make you feel like I'm smart. I could teach in a way that makes you feel like you have to be stuck to me. I mean, clearly I've proven for months at this point in the last 3.5 years that I know where price is going. I could teach in a way like everybody else does, aside from ICT, that gets you to feel like you need to be attached to me because I'm knowing where it's going. And you could use me as a crutch, but I don't want that. I want you to be able to fly on your own. And that's why I teach the way that I do, And then, you know, a lot of you guys, if you do choose to stick around for a lifetime, you're here because you want to be. You know, you're here because you like the community, and you know, we could continue to make each other better. You know, for me to be better, you know, I go off of your feedback in terms of a mentor, or in terms of being a mentor, and then you guys can obviously, at the same time, take advantage of some of the perspectives I have that maybe you weren't thinking about. You know, so that's what makes this community great. My students ask a lot of questions, and they're improving and becoming assets. You know, like they're crushing it. You know, a lot of them, and some are new and they're on their way. But even if you're new, you have value. What value? The questions you have, the things that confuse you, because somebody else may have that same question. You know, somebody else may not have thought about that question, and maybe that is the problem that they've been dealing with. And once they overcome that issue that you bring to my attention, they're able to then thrive as well. You know, so between my teaching, the perspectives I share, my experience, and the questions and experiences and things that you guys go through as students, it just makes this community invaluable. Aside from the fact that we literally know where price is going every single week, and for this year, it's pretty much every day. You know, aside from, you know, maybe like 5 or 6 days recently. Other than that, we've been correct on pretty much everything. Bias and narrative wise, we've been pretty much accurate every single week because of this process. And then execution wise, you know, you can't be perfect execution wise, but I mean, high 80%, I mean, it's pretty incredible, you know, and it's not only me. A lot of my students are also hitting at that rate too, without me. You know, I have a student named Harley who's had his breakout year this year. You know, I've had a couple other students pass funded accounts and they're well on their way. You know, I've had students come to me that have been trading for 8-9 years, and they've now been able to get clarity and understand what they've been missing the whole time. You know, so it just varies, but, you know, the things that we do here are universal. Even if you just take the bias and narrative ideas and you try to trade retail concepts, if they agree with like traditional retail concepts, if it agrees with what we're talking about and it aligns with ICT concepts, ICT has said that that's how you can make retail trading concepts work, because you'll be able to identify, you know, what's the most valid idea. But obviously it's kind of like ridiculous to do. You might as well just go full on ICT purist mode like we do. And, you know, it's less complex. You don't want a Frankenstein approach. You know what I mean? It's just better to do things solo, right? So, yeah. Go look at some of the chat. Yes, thank you. We walk in price. We're walking down price from higher time frame to smaller time frame, and we're looking at Pedia raise and where what price did and where price is likely to go, establishing bias. Yeah, exactly. And Mike, hopefully you've been seeing as well, because the things that we do from the higher time frame and the things that you get to see every single day in the private group, you see it come to life every single day. And, you know, hopefully you've been seeing, you know, the reason why we're able to be so accurate, you know, why these different components are so important, and how they all dovetail beautifully together to create this beautiful picture that is highly accurate. You know, we're right on the money. We're able to box price in if we're not sure 100%. We're able to box it in, and then when it does one of the if-then scenarios that supports a particular direction, we're able to then get in line or be flexible. Whether we start the day knowing exactly where it's going to go or not, we have a process to build the narrative, to identify what it's telling us, you know, through all these different concepts. And hopefully I do a good job of not making it overly complex. There is a decent amount of components, but there's only, you can only make this as simple as possible, right? And it can't be just like 1, 2, 3 type of stuff. This is a complex industry, so you should expect it to be a little more difficult, and have components that are needed. It's an algorithm you're trying to decode. You know, the algorithm has logic. There's different reference points and things that it likes to target. And if you're able to understand, you know, what the algorithm's thinking or what it's trying to do based on the concepts we talk about and things ICT teaches, you're able to then see a whole new world of possibility. and it's much, much more vast than you probably can even imagine right now. As you continue to improve, especially you guys in my private group, you guys are going to quickly see that, it's not only possible to make this a full-time or like a full-time income or a part income to help stimulate your finances, but you could take this further than you could ever have imagined. It's pretty insane. It really is. And I know a lot of you guys have been seeing the lengths in which we're able to take price and how detailed we can be and how clear we can be, even if it's a time when we just can't figure out where it's going. We have clarity in that idea that price is just not agreeing with certain things. And we have the why. We got all the questions, like the what, where, when, why questions. Every single element is covered by the things that we talk about. And that's what ICT Concepts affords you, So yeah. So yeah, I'm glad that it's starting to make sense further and further, Mike. You said, I truly admire dedication, showing up life goals day after day reflects discipline. Yeah, I appreciate you saying that. This is my life. It's been my life for 6 years, and it's going to continue to be, because once I took my first trade and lost, but knew that someone else was making money, and then I learned about ICT and seeing how he talks and a lot of the different experiences that he's explained, and just hearing and seeing what he's able to do, and then seeing it click with me over time. I became addicted to this industry. The passion for this industry is more than anything I've ever had, aside from my daughter. Being a passionate father, it's right up there with that. If I didn't have kids, this would be number one in my life. Well, a kid, right? I want more kids, obviously. Everybody should want more kids. At least that's what I believe, right? But if not, if that's not what your goal is, it's all right. But you have to attach this to something that you care about. I talk about this all the time, or from time to time, especially in my private group. If you're just doing this to make money, that's why people have short attention span. They can't sit here and listen to us have conversations about multiple assets because they're so focused on the indices, or they're so focused on currencies, because that's where they're trying to make money, right? But if that's all you're focused on, you're not going to be able to appreciate the skill set and what it requires. You're not going to be able to face the difficulties that this industry will place upon you and overcome them. And if you're only doing this for yourself, it's like I've said before, it's very easy for us to let ourselves down. It's harder to let others down that we care about. So if you place your importance in terms of trading success on something that you truly care about and cannot give up on, it'll be a lot harder for you to think, I gotta quit, or this is too hard. So, and of course, you don't want to build anxiety because you're trying to impress somebody or something. That's not at all what I'm saying. But you want to make this bigger than you, so that when times that are hard do arise, you're able to then just face it down. And being in a community like this with someone that talks the way that I do, being around students that also have the same mindset and agree, that's what makes this community so valuable and so effective. I feel like, it keeps your passion on fire. Okay. And then things start to click, and I make it simple, hopefully. Right? I try my best to make it simple and applicable. Like today, this process that I just talked about is more important than you probably imagine. Identifying liquidity. What does that help you with? Right? Identifying the narrative. What does that help you with? That keeps you in line with where price is going, so you can know that you're on the right side of the market when things agree, and why, and logically what should or shouldn't happen, and then if it goes against whatever you think should happen based on the analysis and opinions that you've created, you then know to lower your risk, so it helps you with price navigation, but it also helps you understand the whole market, but it also helps you calibrate your risk properly, because every moment in the market does not encourage you to trade full risk, right? Your full risk exposure that you allow for yourself. Not every moment in price allows for that. There's been a lot of those scenarios recently, and you guys have seen, especially those in my private group that get to be with me every day, You guys hear when I'm saying, okay, this is a lower probability condition, so what am I going to do? I'm going to lower my risk. It's one of the first things that I mention. Like before we even dig into the chart and start painting the reason why price is in a low probability condition. I say it right away. All the different components that I talk about create the WMG trading system, obviously inspired by ICT, but most of the concepts aren't really utilized similar to a lot of these other students that are ICT members or students. Okay. That's the beauty in these concepts, because you get to customize and personalize it to yourself. Unlike MACDs and all these other things, which are just static, okay, and they don't really change. Well, some people say that the market's always changing. I don't know how you have any confidence in randomness or forever changing dynamics in the market. Conditions change, yeah. Like we've seen from the start of the year up until now, going into or moving through the summer months, you could see that things have adjusted a little bit. There's been more days where it's, a little more shaky, a lot more stop hunts, a lot more, chaotic moves because of news announcements. But overall, everything stays the same week after week, day after day. Those of you that spend time with me, you see we do the same stuff every day. It's not ambiguous. What's ambiguous is, sometimes, price it'll look a little bit different, but the principles still apply for all the different concepts, So, and it's good to have that structure, which again, I hope that I do a good job of communicating to you guys, so you can start to have a repetitive process. Okay, I want to make one more announcement too. There is 4 students left in my private group that have not given me what I've been requesting in terms of your current trading plan, and then a skeleton trading plan based on the way that I teach, how to create the trading plan. And then just the explanation of each of the 10 categories based on your current mindset. Those of you that have been with me for over a year is kind of who I'm aiming at. And, some of you guys that are a bit new, if you haven't sent at least a rough draft of it, this is very important because it tells me where you're at, and it helps me know what I need to focus on for you individually. That's another thing that separates us and our community and the way I teach to everybody else, pretty much everybody on social media. Every learning experience is personalized, right? There's a baseline, which is the 10 categories of trading plan development, which I tell you guys and talk about. It's all customizable, and it's very personal to each individual. Like one student I'll teach is not the same as another student. Like the way that I teach Mike is going to be different from how I teach somebody else, so on and so forth. So it makes it a unique experience every time someone joins and spends time with me, because everyone's different. Some people are swing traders. Some people use optimal trading tree. Some people use breakers. Some people scalp. Some people day trade. Some people like the daily range. Some people like the weekly range. Some people are long-term thinkers and have a busy job, so they're trying to trade on a higher time frame. There's a different perspective with that, and different ways of applying the concepts to these different perspectives. So that's why most mentors have all these students, if they're big on social media, but most of them fail because they're trying to shove them into a mold, and that's just not how we do things. That's not how I was taught. That's not how anyone's taught in terms of ICT concepts if they're paying attention and listening to what is supposed to be done. It's fully customizable, and there's so many ways to do things, so many different perspectives, and that's something that separates us. So yeah, if you guys can do that for me, those of you that haven't, if you're on the call or watch the replay, definitely do it. I'm going to remind you guys again later in the private group. I keep asking for it because it's very important to help me as the mentor get you to where you're trying to go, So if you guys can do that for me, I'd really appreciate it. And if there's any of you guys that are newer and need some clarity as far as how to set that up, we can get on a call today, or, you could DM me, and I can give you guys a breakdown if it still kind of seems confusing to you. So I just wanted to make sure that I mentioned that. I mention it all the time in DMs, but I know everyone gets busy, so yeah. So yeah, with that being said, again, like I was saying about this current delivery here on the yields, we have an inversion fair value gap. We have that larger perspective from that monthly chart. It looks like it may be holding, but the wicks here are being respected. So, and the SMT. So the wicks and the SMT here, and the possibility for the 5-year to break down through this, basically upsetting the delivery to the buy side. Because that seems like a possibility, we're going to observe, given the fact that we're overlapping. When price overlaps in consolidation like this, this is also something that you have to be very, very much attentive to, because overlapping candles, no like real directional narrative, like no interest to push aggressively in one direction or another, a lack of news, being in the summer months, being in a time where seasonality shows that there's a more difficult scenario in terms of conditions. All of that is low probability signatures or indications. So when you can identify those things, you have to make sure, again, you're calibrating your risk properly and making sure you're getting as many things in alignment as you possibly can, so you can gain clarity. And maybe you have to wait for a displacement. Maybe you're not comfortable trading a condition that's like this because it invites harder to trade environments. There's nothing wrong with saying that you got to wait. Okay? So I didn't want to cough in your guys' ear. All right, so if you guys haven't really heard how I identify low probability or higher resistance environments, what that entails, I just gave you a list right there that's pretty hopefully to the point, okay, and easy to apply. So whenever you see this type of stuff like overlapping, higher time frame, monthly, weekly, daily candles, and prices hanging around equilibrium, right, like I mentioned earlier, a crack in correlation overall, if seasonality is showing that the data is all sideways like it does in the summer months, if it's just unwilling to move, right, that's generally a low probability condition and high resistance environment. So these are the times when price looks like this. These are the times where you'll most of the time take losses. If you go back and look at some of your data and you see what price was doing, a lot of times these characteristics will be in place. 95 us said stop trading gold because it's been having back-to-back inside for months for a while now. Yeah, gold, things like gold and different commodities, they're very news-based. There's actual true supply and demand factors that drive things, and headlines are also very, very used to manipulate. So ICT says that they're event-driven markets. Doesn't mean you can't trade it, right? Doesn't mean that it's something that if you've been comfortable with and getting familiar with, that you need to toss it out entirely. It's actually a benefit, especially if you go from commodities trading to indices trading, because remember, commodities are within the risk on, risk off analysis. So if you're able to be comfortable with identifying what price is doing in those assets, it's actually a benefit if you move to the indices. I do recommend that you guys try out the indices, maybe S&P, or if you're trying to get comfortable with things, or the NASDAQ, which is, I started in the S&P. Before I did that, though, I started in the currencies. I was trading GU and EU. GU specifically because I liked how fast it was. And then once I transitioned from the currencies, which was about 3 years ago, I was then on the S&P. Once I got comfortable with how the indices operate, what impacts the indices and how the relationship is between the other assets, I then moved on to the NASDAQ. And this is where I will probably live for the rest of my life, assuming that we have trading and indexes stay for my lifetime. I will live there permanently because I just love it. There's no reason for me to look at anything else. NASDAQ does plenty of volatility. S&P does plenty of movement. It's a little bit more forgiving, a little slower, but the dollars per contract are double in the S&P. It makes up for the lack of speed between the NASDAQ and the S&P, right? The S&P, one E-mini contract is worth $50 per point, or per tick or whatever, and the NASDAQ is $25 per point, right? So, but it's faster than NASDAQ, okay? But the The micros, it's also very similar, right? The micros for NASDAQ is $2.50 per tick, and the S&P is $5, right? So again, it makes up for the slowness by doubling the amount of value per contract, per tick. Okay, a lot of people they don't know that, right? These are intricate details that get lost in the sea of information and the ambition to try to be a trader. But that is some basic information that is pretty important, I would say. Some of the basic stuff that should be known. But yeah, let me see what is happening here. It's kind of strange because I look at the... Oh wait, no, never mind. I was looking at the monitor for my YouTube live, and it didn't show some comments, but I guess it did. It was just lagging. But yeah, so again, this is where we're at on the yields. If we go to the weekly, we got the inversion for value gap here, so we're going to watch that. If we stay below that, remember what I mentioned about the wicks. Okay, it's respecting the center portions, and you know we're going to continue to see if that's going to hold up. And if we get below this low here, this high, failure swing, and a breakdown below this, that'll turn this delivery lower, higher with the failure swing, delivery lower. That'll leave this as a potential balanced price range for the wick, right? We got high, low, high, right? So buy side and sell side's delivered up there, and then it breaks down below that. That would turn this into a mitigation block, potentially BPR, right? If it was to break down. So that would be the contextual PD array that would help us support price continuing to smash lower towards something like this or this eventually. And then, of course, we'd have to monitor how the behavior is going to be within this monthly fair value gap. Okay, so as long as we stay below this, as long as this delivery holds up, I would say that buys will get back in line with a level of importance if we start to displace above this, especially if we hold from this quarterly bullish order block. Because look at the delivery from that. It looks like it was holding. It still looks like it's holding. It's just kind of being held for time distortion. This has all been in anticipation for the interest rate announcements. You remember back at this time, right? We called this. This was a breaker, similar to how this wick was respected here. Notice the 50%, and the price continued to push. That'll be a similar characteristic in here. If it delivers through this wick in here, I'll look for price to return back into it, and then use it as resistance to set up a move lower if that is going to be supported. Improves it up at that time. But for now, right, we still got the inversion up here, consecutive up candles. If we move up to the 2 week, I'm sure it's an order block. Okay, so we got this order block in here to watch too. It's a weekly order block. So these are some things that are going to potentially build the narrative early on to maybe adjust from the bullish delivery to a potential bearish delivery. And again, we have this large wick, which you could see has been respected as well. But again, if it was to use this order block here, reject, and break down below this low, then we have multiple PD arrays now finally getting violated, which then could support us being flexible and targeting downside. If this goes to the downside, that supports bearish DXY and bullish indices. If this goes higher, that is ideally supporting downside indices and bullish DXY. Okay, so we'll see eventually what takes place. We have CPI, so I wouldn't be surprised if CPI triggers in either a start back within this run higher, or if it is the catalyst that is needed to upset this run higher and get us down below something like this to then trigger the transition from price going higher to going lower. Right, I just mentioned a lot of stuff right there, so let me just make sure I confirm with you guys. Does everything make sense so far from what we did from the quarterly, monthly, down to this weekly chart? What would then support us continuing to go higher, which is what we're going to assume until this is violated. Okay, because if this is broken, okay, we got the fair value gap, swing low, and we got this wick here. Okay, so that's 3 PD arrays, aside from this as well. We got the overlap here with the fair value gap delivery. We got the possible mitigation block, possible wick that's going to act as a balanced price range if it trades into it again, if it breaks below it. And again, we have this overlap in here. So if that holds, that supports us continuing to drop, especially if it breaks this. But if that doesn't hold, then we get back above, say this fair value gap, above this one, and starts looking like it's going to react to the buy side here, which is what's intact right now and is favored until proven otherwise. But if that takes place, then we could then have a reliable run to the buy side that would then show interest for the DXY to continue going higher, and that would then instigate us potentially dropping yet again, maybe for something more meaningful in the indices. Okay. But again, that's assuming that this goes higher. We're kind of in a range, so we got to wait for one of those scenarios to take place. But yeah, before I move on, does that make sense? Everything from that higher time frame down to where we're at right now, and what levels are important and whatnot. Okay, Tyler said, yeah. Appreciate you hopping on, Tyler. It's my little brother, for those that don't know. 95. Okay, so yeah. All right, well, I'm going to take those two yes comments as I can move forward. Okay, so if we look at the daily chart, keeping in mind all the stuff that we've just mentioned, if we go to the 2-day, I think there's no order block in there. We do see a wick in here. Okay, we've got this run higher to the drop lower, so let me actually break this down a little further. So what I'm looking for here, what I'm trying to identify is the possibility of this delivering as a market maker sell model. Okay, within the context of what we've just talked about. Okay, all the different components leads us to where we're at right now. Okay, so we got this wick here, right? Notice that we have this run higher, right? We do have equal highs up here, so that's a bit sus if it was to displace and get above this wick here. But we see this delivery higher and then an aggressive sell-off lower. We have this possible market maker sell model framework. At least the components look like they're there. And it seems like we're down at the second stage distribution level. We have potentially relative equal lows here. Within the possible context that would then turn us to the sell side, right? If this was to break down. It would then get below this. That would then turn to a large wick to the downside that may be used as resistance, but also a potential mitigation block bearish if it was to get us back down through the level. So this low to that high, right? There's buy side, sell side delivered aggressively. That's why the middle portion of this, if you go from here to this high, the center portion's up here. Okay, so this delivery higher, lower, it's behaving like a balanced price range. Okay, so with that being the case, and this rejection here, this here, because it traded into this fair value gap, should be able to act as an intermediate term high. Okay, so if we're going to continue to drop and price is going to be supported to go lower, given all the things that we talked about, if it's going to start giving us that early sign that it's going to have a meaningful delivery lower, this is going to have to stay intact because this is an intermediate term high. Okay. Why is it an intermediate term high? It traded into a fair value gap, and that high that traded into the fair value gap has a lower high to the left, lower high to the right, right? So this should be able to hold in price if it is going to want to get us lower. It has attempted it, once more. Let me go see. And we do have this weekly bearish order block. Let me just go and further confirm one more time. Yeah, so we've got that weekly bearish order block. Okay. So it's ironic that it's trading within that, right? We also have the contextual idea here and the inversion fair value gap. All of this stuff supports us continuing to drop. And then, of course, that's going to be fully confirmed even further if we can break down and get below this low, because then that would turn the daily chart into something that supports what this lower time frame is giving us early signs of. Okay. So going into the next this coming week, we're going to watch how this stuff is going to either hold or get disrespected. I can say that if we get above this wick in here and it was to break above this, we obviously have very clear targets up here, that being the buy side, liquidity, relative equal highs. All right, and then of course the inversion fair value gap, it's going to have to hold. But if it doesn't, right, we trade through these levels. Again, that's early signs that we may be not done going higher. That would be a bullish sign for the DXY. Right, and again, I've said this before, but I got to constantly say it. Sometimes the interest rate markets are not going to be in alignment with what the current relationship is. So when that's the case, you got to just put it aside. Keep in mind your analysis, what the indices are showing you, or the interest rates are showing you, and then if it kicks back in line with what your asset is doing, like the indices or currencies, for example, then you're going to have a supercharged directional narrative. And it's going to be supportive of whatever it's doing in that moment. But when it's cracked in correlation, that's also something that could be a problem. That could lead to more low probability conditions. Because at any moment, the indices and the DXY can kick in line with the relationship they have to the interest rates. So that doesn't mean that if the interest rates are cracked in correlation with those assets, that you can't take a trade or it's not worth taking a trade. It just means you have to lower your risk and go off of what that asset's showing you and try to gain some more clarity through other intermarket relationships. Like, for example, if you're trading the indices and the indices are cracked in correlation with what the interest rates are doing, you would have to see what's happening on the interest rates, and then you would go to the DXY and the other three indices, or other two indices if you're using a NASDAQ, and you would base your opinion off of that higher time frame on the NASDAQ, and basically what the relationship is between those other two indices and the DXY. Try to see if you can get some alignment with those assets while the interest rates are kind of broke in correlation until they finally get back in line. But again, once they get back in line, if they've been cracked in correlation for a while, if you can make an assumption of what the indices and DXY are doing, it supercharges it. Because this is one of the critical elements to high probability. Another thing too, if the interest rates are consolidating, and then you're seeing, sorry, I didn't mean to cough so loud in the thing. But when the interest rates are consolidating, that generally can make it a little bit difficult for the indices and DXY to trend, because when things are trending, generally, if you look at the interest rate markets, they're also trending with a positive relationship to their relative assets, like the yields to the DXY and the bonds to the indices and the foreign currencies. Okay, so that's another important factor when it comes to high probability in clean, one-sided trending environments. And then sometimes if the interest rates are consolidating, that'll lead to the indices consolidating, or the DXY consolidating. Okay, so that's another way you can confirm. Aside from what I said earlier about like the midpoint, right, the equilibrium of a higher time frame range, if price is hovering around that on a higher time frame, it has a very similar effect to what happens when the interest rates are consolidating. That impact on the indices can lead to consolidation. All right. So yeah, I hope that makes sense. That's some high level interest rate market analysis understanding. I've mentioned it before, but yeah. So yeah, this is what we'll watch for this. Okay. Like I said, you go to the daily chart, you get your previous day's high and low. That's Friday. So on Sunday, going into Monday, you got to refer to obviously the liquidity pools that we mentioned for the week overall. But for Sunday and Monday's trading, if you never trade Sunday, because it's why are you going to trade Sunday? It's the main part of the manipulation and consolidation within the weekly range. But if you're going to trade on Monday, like I've mentioned before, your target should be looking at or considering previous Friday's high and low, because it's going to be used. Because this is the current candle, right? This is the current range. Right? When price opens up, it's going to be within Friday's high and Friday's low. So just like we talked about on the weekly chart, when it opens up, the first liquidity pool it's going to target, for the most part, if we're just looking at this time frame, it's going to be this high and this low, right? So it's the same thing when you go to, say, like the daily chart, right? And you're going to trade on Monday, or consider trading on Monday, or look for some logic that's going to set up a trade for both targeting and opposing liquidity on Monday. It's going to be utilizing the Friday's high and low, especially if it's left from Sunday and it trades within that. It's just building more liquidity now from Sunday and Friday, okay? And then, of course, all of this has to be viewed from the context of what the higher time frame weekly and monthly chart are doing as well. But this is kind of how you can get closer to the liquidity that's important. You could do this too. I'll let you guys go and do this, but you can also do this for 8-hour candles, 4-hour candles, 1-hour candles, and understanding of those ranges and what's important right now. You could do it for 1 hour, if I didn't say that. You could do it for 15-minute, right? The lower time frame that you go, obviously, it's less significant to the grand scheme of things. But still, if you're a scalper, like, that's an easy way to frame out a particular narrative. I've never pointed this out. This is the first time I'm mentioning this, but this is another layer. Like I say, things can get taken deeper and deeper and deeper, more than you can even imagine. But this is a good example of that, using this concept, using previous candles, previous ranges, as the hours pass, days pass, weeks pass, months, quarters pass. Right? So I hope that makes sense. But yeah, this is pretty much my overall opinion for what I think we should monitor for the yields. Obviously, that's going to have an impact on what the DXY does, so that's why this is important before we get to the DXY. Then we're going to take a quick glance at the bonds, and then we'll get to the more popular assets. But yeah, so before I move on, does this make sense? Does everything make sense? Do you guys understand what I've mentioned? Do you guys have any questions about some of the stuff that I've mentioned before I move on? Because I don't want you confused. So just give me a 1 in the chat if it makes sense. Just need like 1 or 2 of you guys to confirm. And then we'll move on. 1? Okay. All right, so moving along. If you got any questions, obviously, you could just let me know. But yeah, so just like how we did on that asset, we'll just quickly look at the quarterly, right? We got quarterly low here that used the wick, right? Let me actually remove the quarterly shift perspective. We'll keep the quarterly shift idea. We'll keep that in our mind when September comes, because that'll be like September, the start of September after this month, because we've pretty much delivered most of what I believe would have been a quarterly shift. So yeah, and it didn't really do a shift in overall sentiment going higher off the bearishness, but it's kind of just stagnated since April of last year, for at least from this quarterly chart. And then this previous quarter from this year obviously took the previous quarter's high and low. The quarterly high was in convergence with this quarterly bearish order block. That's what it used to trade up into for manipulation. So 3 months are encapsulated in this quarterly chart. And we could see how for 3 months, Power 3 delivered bearish. Okay, it's kind of an indecision candle, but nonetheless, open manipulation into the PD array above current at this time, right? The current or previous high, right, from the quarter, whipsawed above it, hit the midpoint, respected the center point of the order block, and then just continued to deliver lower, taking out both the previous quarter's high and the quarter's low. So for 3 months, if you had this view and do the things that I've been mentioning, you could have bias and narrative understood for 3 straight months, right? Targeting this high to then breach into this and then go lower, given we've been bearish, and 3 PD arrays overall have not been taken out on this time frame. So on a larger scale, it didn't really change too much. Obviously, when you go to like the daily and weekly and lower time frames, you're able to then navigate within the concept or within the the context of this delivery running higher, taking out quarterly high, quarterly order block, then sending price lower. Obviously, you can get more close to it as I showcase. This is just a good overview, right? And so the overview for now, if we could quickly go through this, we got the yearly low, right? That was the start of the year, okay? So there's also the yearly high, okay? Price ran up above that, swept that out in the context of what I just mentioned, and then it targeted the yearly low. So now, we have that understood, right? Price got a little bit above it. And so now we have this previous quarter here that's available for, let me actually put that as a quarterly low, previous quarterly low. We could remove that unless it gets down there, then we'll put it back on. But yeah, we have the quarterly wick, right? Price hit that, so previous, higher time frame wick. It's used the same way as the lower time frames are used. Do you notice that? You see this down wick up here? Okay. Price rallied up into it, came right to the midpoint, and then rejected, continuing to support the down delivery. All right. So all the same stuff applies, even on these large, grander time frames. And if you can solidify this process and understanding and move it to the higher time frame, navigate it to the lower time frame, you can make sense as far as why I've been able to call the bias and narrative for literally the entire year, almost 100%. Okay, obviously the execution's a little less because you're going to take losses. You're not going to be right 100%. Bias and narrative wise, though, I mean, I've proven, recorded live, week to week, every Sunday, that we're able to call the market every single week where it's going to go. So hopefully that's been enlightening. But yeah, so again, with this being said, we have the swing low down here. That could be a target. This is a previous week's low because the whole quarter hasn't, or it's a previous month's low because the quarter hasn't closed. All right, so this is July's low. So as we drop down in time frame, we'll do the same thing. Okay, so this is the monthly low from July. Where is my previous? Where's my previous month? Did I miss it? Oh. Well, we got monthly low, monthly high. All right, so if we zoom in a little bit, we could see we got this monthly fair value gap, right? It's been pretty strongly respecting the center portion of that. I did highlight this little gap in here. Okay, let me actually put a border around that real quick. Okay, so you look at how we're respecting that still. So I don't think unless we displace higher and get above this monthly fair value gap, I don't believe that we are bullish. Unless, of course, that changes, and it very well could very soon, given CPI. CPI could be the reason that it changes, or CPI can be the reason why it gets started and starts targeting these levels. So we see that this wick here, midpoint, was being respected. It's kind of the reverse of what was happening in the other asset, the yields. All right, so it's respecting this midpoint. Seems as though, at least for now, it's somewhat respecting this midpoint. So maybe we see a displacement that gets us up using CPI to trigger in a more pronounced monthly delivery to the buy side, maybe targeting this. If it does get up above these levels, we have this wick up here to watch. We have this inversion monthly fair value gap here and here. Then we could potentially watch. And if we move up to 2-month chart, yeah, there's no order block or anything. So yeah, we'll keep this in mind. We're overlapping candles again, so again we gotta kind of put it to the side, but hopefully it's understood as far as what could potentially be the case. Let me go to the quarterly real quick. So yeah, this is a bearish order block, or it was if it was to continue to get down, but it's more this being the order block, and now the wicks are being respected in here too. So again, we got to just watch what it's going to do. I'd prefer to see it continue to drop if this continues, but again, I wouldn't be too shocked if we get price opening up to the buy side. All right, So it's overlapping, so we'll just keep in mind what these levels that I have mentioned, and we'll see what price wants to do in the coming days. Remember, the yields dictate and have a high influence on what the DXY does. It's reverse to what the indices and foreign currencies will do. This is positively influenced, right? This influences if, like, say the indices are going to continue going higher. If that's the case, we want to see this have an interest to go higher. Same with the currencies as well. If we want a bullish trend on the currencies, this has to go higher, or we prefer it to go higher. It doesn't have to, because sometimes there's cracks in correlation and price will still do whatever the hell it wants, right? But the most ideal conditions is when the interest rates and the DXY and the indices have their relative relationships in sync. And again, this is positively correlated. So if indices go higher, this should go higher. And then, of course, DXY should go lower. The yields are reverse, right? So the yields positively impact what the DXY does, but negatively impact or negatively correlate with what the foreign currencies are doing and what the indices are doing. All right, so yeah, we'll put this aside and see what happens. Both the indices are consolidating, so we'll see if CPI can give us a displacement. But yeah, moving along to the currencies, we see that price gave a pretty strong decline into this bullish breaker. It's also a quarterly bullish order block. Okay, so let me actually clean some of this up a little bit. So yeah, before we move to that, notice how quarterly high, previous quarter's high was swept. Higher time frame level was swept. Price then instigated a retracement back into a discount. What discount? This bullish order block. Looking at it from this quarterly time frame, that makes this drop seem a whole lot less significant. Would you agree? Right? Most people think, oh, the world's ending because they're on this 8-hour chart and they've seen this huge decline. It makes sense why this is now turned around and started racing higher again. Because on the quarterly time frame, all it did was reject and retrace. Okay? On the monthly chart, it looks like it just came back down to a bullish breaker. Right? This bullish breaker has now pushed price back to the buy side. Okay, it looks like we just basically traded into the wick in here, and now price is still moving. Does any of this structure scream to you that higher time frame wise, the narrative has changed, and we're now going to sell off for months? Now, if it respects this order block here and breaks down and starts to attempt these relative equal lows, maybe even look like it wants to reach out into here, then of course things may change. We may be more solidified to the sell side. But for now, I mean, if this was the 5-minute chart, this looks like a bullish breaker. It is a bullish breaker. It's also a quarterly bullish order block, and it looks like it's respecting that. So why would you try to force shorts? It makes sense why this is now held up. Some of you guys maybe, this is, something that clears up a conflict you had last week or, from the last couple of weeks with this decline. Maybe it clears it up and puts you now back in line with clarity. Unless this gets disrespected, or unless this is respected, it's going to continue to go lower. But if it's disrespected, it'll continue to go higher. Okay, the middle portion is what would disrespect this bearish order block. Yo, what's up, Nina's? Welcome, brother. I'm assuming it's your first time on. Appreciate having you on. We do this every Sunday, and we go live also to trade live on Tuesdays. But I go live every day in my private group. And yeah, I encourage you to watch some of the videos and some of the sessions that we've had, because all year, this may be a shocker to you, maybe because people aren't confident and they don't know what they're doing. But literally for the last 8 months, we've been in line with the market, pretty much 100% in terms of bias and narrative. We've been hitting at a high 80 to 88% strike rate, which I proved through Top Step, a dashboard, plus going live every day with my private group. So if I was lying, they would come out and tell you and expose me. Be a very easy exposure if I was not telling the truth. So we got a small account, but we trade well above the notoriety level being small. So yeah, welcome. There's a lot for you to learn here. Hopefully you can find a home here in the WMG trading family. I appreciate your support. And again, for those of you that get value from the content, don't forget to like the video, subscribe to the channel if you get value, and spread the word, right? If you have anyone that needs help, and you feel that they could benefit from this community or maybe add value to the community, because that's always encouraged as well. Definitely invite them, because it helps the channel grow and shows me that you like what I'm doing and it's helping you. That's the main importance, that it's helping you. Okay. But yeah, so like I said, from this view, because we start on the monthly, again, you got to take the monthly high, monthly low, previous month's low. You see how that got swept in the context of this monthly breaker, and that liquidity was paired. Plus, there's an SMT, I believe. Maybe not. Yeah, no, there was not really any SMT that's worth mentioning. Yeah, not even here. There was an SMT at the fair value gap, obviously, in the lows with the Dow and the S&P and NASDAQ that led this to go higher. But yeah, so hopefully this makes sense as far as why price is going higher. Maybe you thought price was going to short and you were trying to force sells or push sells because you were convinced off of this drop. And then maybe you took some losses as price looked to rage back against that. Hopefully this has now made sense as far as why it did that. Because remember, the why is so important behind your ideas. And I spent a lot of time. That's why I spent so much time. That's why it's been an hour and 30 minutes that we've spent solely on breaking down ideas based on the price delivery and the bonds and yields. And then, of course, it's going to be quicker to get through these other assets because we've talked about a lot of the principles, a lot of the different things that are important that we're going to use as we move forward. Okay. So yeah, hopefully this makes sense. Again, the only way I will push this to be bearish overall and start to support bearishness is if this holds. Okay. And we trade up into here. Maybe we open up, trade a little deeper, and then displace aggressively, trading back through this. We also have a bullish weekly order block here too now. Okay, notice how this was a previous week's candle. Price opened up inside that weekly candle. Let me actually clean this up a little. Again, we do got this daily bearish order block, so I'll keep that noted. But it's also a weekly bearish order block. So we've got the daily and the weekly. So yeah, and then of course we have this order block in here. We also have stops rated. It did leave equal lows. So if it does want to come down below these lows, we now have a narrative. If this order block's respected and it looks like it wants to attempt to get down there, we have a very easy, clear context to then readjust and then try to target shorts. But unless this doesn't hold, right, it's going to continue to go higher. But if it holds and pushes lower, again, that's the context down here for the contingency idea, for us to go from bullish quarterly order block, monthly breaker delivery, to then bearish order block, aiming for equal lows that were set, targeting this fair value gap on the monthly and these relative equal lows. Okay, so unless that happens, unless that's supported, we're going to continue to push for buys because nothing has changed. Like I said, on this time frame, if this wasn't the monthly time frame and you saw this on the 5-minute, you would be thinking this is bullish. So why would your opinion change just because this is the monthly chart overall, right? It's going to take some time for this to deliver up to the highs up here if it does do that. Or if it's going to try to disrespect the buy side delivery and start to then support the potential for downside delivery, right? It's going to take some time. But given the information we have so far, this is supporting us continuing to push price to the buy side unless this holds and pushes price lower. All right, we're not going to assume that. We're not going to pick a top. We're not going to pick the bottom, right? We're just sticking in line with what price has shown us here. And this is pretty much a stop hunt here, run above the high. We've been talking about this breaker pushing price higher all throughout since we were over here. Again, you can easily verify anything track record related. If you're new to the channel, you can either stay here and watch us do this week to week and then build an opinion from that, which is very easy to do because we do this every week. Or, if you don't trust it and you don't have patience to wait to verify, you could then go and watch some of the older videos. Look at my opinion. I make them public. I put my neck on the line if I was lying, if I was, not being truthful, because some of this is a big claim. High 80 to 88% strike rate, passing funded accounts live, almost 100% accurate with bias and narrative. That's a pretty insane claim. Most people can't do that, but I've proven it. And I say this to provide efficacy to what it is that we do here, to show you that there's things that you can take away from what it is that we do and what I teach. Okay, whether that's being here on the YouTube channel or joining me on a more intimate, close, hand-holding basis within my apprenticeship community. But either way, you're getting value regardless, whether you can see that as reasonable or not, or if you just stay here on the YouTube channel. The value is immense that's provided. And because I have the goal of helping people succeed, there's no limit. If I could hit 1 million people, changing their lives, that'd be amazing. But we'll see, right? We'll see what God has in store. But yeah, for those of you that are new, just keep these things in mind. And hopefully you've been getting value from today. Like I said, if you get value, don't forget to like the video and subscribe to the channel. But yeah, this is my opinion on the currencies. Okay. I'm going to continue to push this to the buy side. We got this bearish order block. We'll see if that holds. We're not going to assume it's going to hold. We're going to wait for it to prove it's going to hold by giving us a rejection from this level. And then if that takes place, then we could target the downside. Okay. And again, the start though, if you haven't done this already, or maybe you showed up late, when you look at a higher time frame, you got to map out monthly high, monthly low, previous month's high, previous month's low, and maybe some that are in close proximity from previous months. And you want to mark that plus close proximity PD arrays like this, the order block here, and this bullish breaker candle, given this larger delivery, because all of that is relevant. This fair value gap is not relevant right now as much as this is, because it's delivering in this. This is currently in play. And this one also, because it may get into play and start sending price lower. But like things like down here, or any imbalances over here, or order blocks that are way away, those aren't important. It's just this price delivery in here that's important. Okay, because this is all going to impact what price does moving forward, right? So yeah, with that being said, hopefully that makes sense. Again, if you guys got questions, don't be hesitant to ask. But yeah, this is pretty much my opinion for this. There's not really much more to talk about aside from this weekly bullish order block. Let's just add that for completeness sake. Okay, just have that for reference. This is also a weekly bearish order block. If we move down a little bit further, we could see that this acted as a bearish breaker too. And that was used to push price lower into the monthly breaker, right? And if we go to the weekly, it just kind of attempted to trade through some of these levels. The weekly looks a little suspicious if you're just using the weekly, right? You would think that, oh, there's probably a possibility for this to be a delivery that goes lower. Multiple PD arrays, things have been pretty strongly traded through. But then once you move to the monthly chart, you see what the true intention is. If you go to the quarterly chart, you see that it all has basically been used to trade into the quarterly bullish order block. And seeing this reaction away from this, unless this holds and pushes us back to the downside, this will continue to hold in price and it'll go higher for long term, like the next month, unless it proves otherwise. Okay. And then on a week-to-week basis, obviously we have the near-term liquidity based on this time frame. We got the wick, right? So trading into that, those are all targets. If it was to respect that, that may be an early sign within the bearish order block we talked about that may hold price, right? If it rejects from these levels and say gets down below this order block midpoint, then my attention would be able to adjust pretty confidently to this monthly fair value gap and these relative equal lows being targeted. Okay, because that would upset things in terms of overall delivery. All right, so yeah, these are my opinions on the currencies. We'll continue to try to push price higher. We have this low to that high. Center portion should act as a balanced price range. Also, we have the order block up here, the larger grand scheme of things. So these are levels that we got to watch. And if they start to reject and start, really displacing down through these levels, and then we break through the middle portion of this weekly bullish order block, that puts us in position to then go bearish. Otherwise, this should potentially continue to go higher off that quarterly order block, which is 3 months, and this monthly view, looking at the quarterly bullish order block and the monthly breaker, still being supported, and it's also leaving open this fair value gap, right? So that's a pretty strong indication that we're still going to favor buy side, aside from all these other things that we talked about, right? Because it couldn't get down there, so we'll see what happens moving forward within the lens of what we've discussed here today. Okay, and again, if this goes higher, we would really like to see the bonds go higher, because that is positively correlated to these assets, and it's also positively correlated to the indices. Okay, so that would support further or have further context behind the fact that this is going to go higher. Now, if they go lower, right, if the bonds go lower and we see this reject start breaking down through this weekly order block and these levels I said I would like to see held if it's going to go higher, if they start getting violated, plus the bonds are dropping, that further solidifies the narrative maybe changing from bullish to bearish. And then we could use that context to further solidify this monthly fair value gap being targeted and these equal lows. Right? Otherwise, again, it's going to continue, and we're going to stick to our narrative, which is bullish. This low to that high, we should be able to slide through the middle portion because this should act as a failed balanced price range. So that would further assist us in confirming the price is going to continue going higher. So one thing we can also identify here is the start of this delivery lower. We can classify that as an original consolidation. We can also see that this is an accumulation, reaccumulation, okay, possible smart money reversal, first stage distribution, possible second stage distribution. If that's the case, this should have no problem trying to break through the middle portion I just talked about up here. Okay, breaking through. I don't generally go down lower and look at different time frames, but I guess I'll make an allowance for today. Just to further drive home how deep and detailed we are when it comes to our bias and narrative, and how we're able to be flexible and how we're able to be sure about things. Remember I said the what, when, where, why, how, all those different elements are answered through what it is that we do. Okay, so this is a good example of that. Okay, so we'll see how price wants to utilize this fair value gap. But again, if this is going to act as a market maker buy model within all the contextual ideas that we just talked about, which hopefully has made sense, basically solidifying the fact that we're going to continue bullish. If this is going to continue, this second stage distribution should be very strong and push us up above that, hopefully supported by a displacement on the bonds and a bearish DXY. All right, so we'll see if that is something that works out. But this could also be viewed from the lens of a market maker buy model. Okay, to further support the analysis we've made a conclusion on to go higher. And if this fails and it creates a failed market maker buy model and it displaces through the middle portion of the weekly bullish order block I just mentioned, then that will pretty solidly give us another confirmation the price is not interested in trying to go higher, and it will then look to start shaping up to go lower. In that case, we may then turn around and use this as a market maker sell model. Okay, We're always in a market maker buy or sell model, always. A pretty big statement, but ICT himself has said it, and many students also talk about it and have made the observation. But yeah, this is just another layer to our conceptual, contextual confirmation or invalidation principles. Aside from the 3 PDA rule, we also have things like this, failing market maker models. They're also on the higher time frame, also very helpful in price navigation and validation. Okay. So yeah, and if you're confused with market maker models or you haven't studied these a lot, so this kind of doesn't make sense to you, just go study market maker models. Go look at my market maker model video, and hopefully it will build some clarity. And if you need any help or questions, you could just ask me in the free Discord. Those of you in my private group, we can always hop on a call live, do a one-on-one about it. More than happy to assist you in that regard. Market maker models are one of the pillars to my approach, so I am very, very familiar with them and use them daily. So yeah, hopefully this makes sense overall, but this is my overall opinion on what I believe the currencies should do or could do, and what would validate or invalidate these particular ideas that we've just talked about in detail. Okay, so yeah, with that being said, let's move on to the DXY. Good old DXY, get into the meat and potatoes of what's taking place. All right, so with that being said, let's go start from the monthly chart. This monthly chart has been very helpful. We do, mind you, the same stuff, same process that I've just employed for 3 separate assets, from the bonds, yields, and the foreign currencies. We're gonna do the same exact thing. So here, let me ask you guys this, make it a little interactive. What is the first thing I should be looking at, or you should be looking at, or thinking about labeling when you look at, say, the monthly chart or any higher time frame chart? What is the first thing I have mentioned you need to look at and identify? I've done it 3 times in a row. Well, 3 times. And I've mentioned it 3 times. So those of you that have been here, let's see who's diligent and been listening. Let me know in the chat, what liquidity pools are most important? Previous highs and lows. Previous highs and lows of what, though? Or just like these highs? Lows over here? What previous highs and lows? Weekly, monthly, daily. Yeah, depending on the time frame you're on. Why? Because when price opens up a new candle, say on the monthly, on the weekly, or the daily chart, or any of the other lower time frame charts, right? Because remember I said it can get deep. You can do it on the same principle can be used on these lower time frames as well. But the reason being, it'll aim for Friday if you're trading on Monday. That's for sure for trading on Friday. Immediate previous highs and lows. Yeah, relative to the time frame that you're observing at the time. Okay. So in this case, right, given the fact that it's a monthly chart, doesn't matter if we're on the quarterly, doesn't matter if we're on the yearly chart, the 6-month chart, 2-month, like I said, 3-month quarterly chart, doesn't matter which one you're on, the same principle applies. The immediate previous high and low, and if there's if there's one in close proximity that's like 3 or 4 weeks or months away, or a couple quarters away, you can also highlight that too if it seems reasonable that it would potentially want to use that within the context of what you're trying to identify, right? So, in this case, here, I'll clear the board real quick. Yeah, let me actually go over here. Okay, so we'll start at the quarterly chart, do a quick analysis on this. Quarterly FVG with the current quarter's high. Right, notice, let me see. So current quarterly high, got the previous quarterly low. so quarterly high, quarterly low. Okay, and then we got close proximity PD arrays. Okay, and we also got we got a fair value gap up here too, which is pretty interesting. Can map that out as another level of rejection. All right, so you can kind of see why the wick has happened. Okay, you can also see that there's a delivery in here. So if it's going to be continuing to go lower, it shouldn't have to come up into here. Whether this is happening on the quarterly chart, whether it's happening on a 5-minute chart, same principle applies if price look like this on the time frame you're looking at. Okay, so this upper portion of the fair value gap already has buy side and sell side delivered. It has an order block, it has a wick trading through it, multiple delivery levels in here trading through this. So there's no real reason, unless it's going to actually turn completely, there's no reason for it to really want to get up here, right? And it may change, right? It may turn around and start moving up there, you know, depending on what they want to do from this quarterly fair value gap. I don't believe so. There's nothing telling us fundamentally that that's going to happen, but you know, you'll never know. You know, I'm assuming though, given what we understand about, you know, what leaves or when fair value gaps are going to be left, which I've talked about tremendous amount of times this year with many different reasons. But given the fact that we see all this, we're just going to assume that, you know, price will probably stay below that. It's closed off the delivery into this, you know, also it's a fair value gap in here too, right? So we're below these levels. So, you know, we'll see what happens. But this is all you need to really pay attention to here, unless price was to show that it wants to deliver further and try to get into this. But again, I don't really think it's going to need to do that. You know, it may not really have to do that unless obviously something changes, right? If we go from that quarterly chart, then we go to the monthly chart. Okay, we see that this quarterly high is also in alignment with the monthly high. So there's really not a need to put another line there as well. But you see that the previous month's high here, right? Price opened up inside this to create this current month. And price, what did it do? It delivered higher into the wick, right? Into this down delivery in here, into the fair value gap here on the quarterly chart. Notice how from the quarterly to the monthly, there's some levels that'll overlap. That's very important. When you see converging PD arrays like this, those are very, very powerful levels, very significant levels. Some type of business is being done at those levels for the most part, and they're going to be very reactive when they're overlapping. They're very, very, it's a very strong confirmation for a level to be very reactive. When you have overlapping PD arrays from one time frame to the next, it just shows that it's truly there. You know, it's not just a one-off fair value gap or order block or whatever. It's something that's actually important. But yeah, like I said, you want to highlight these levels, right? Every time frame you look at, the highs and lows, sometimes the previous highs and lows if it's close. But yeah, so we have this previous quarterly low. Okay, let me actually go back up real quick. Yeah. So again, we have that. We won't really have to make it too busy and label that. I mean, just simply trying to target this again. We know that there's another quarterly low below there too. We see the levels up here that are respecting price, delivering price. So this, if you're looking at this time frame, what does this tell you about price? What does it look like it wants to do? It looks like it's just simply, if this was the 5-minute, price simply retraced up into this wick. It's retraced into these levels. It's been super bearish. So nothing has changed. You know, why are you going to pick a bottom? You think that this is telling you that it wants to go higher? You know, like why would you assume that? You know, if you're on the 5-minute, you wouldn't assume that. Would you think that this is going to go higher if this was the 5-minute and we were in New York session right now? This clearly looks like it wants to go lower. You know, so this whole run up higher, we have not been assuming for the last couple of weeks that price is going to go higher. You know, it went higher, yeah, but what did we look at? We looked at this wick. You know, if you go back and look at some of the videos, I pointed this out. Notice how it failed to break the mid portion of that. So what's happened? It's used it to reject this here, like noting that this does not look like it was going to go long-term bullish because these levels are still present, and it would have to get up above levels like this for us to trust that buyers are now going to be stronger than or more interested than selling. right, and disrupt this sell-off idea. Because that is not the case, because structurally it still looks bearish, doesn't that make more sense? Why this huge rejection on the indices took place, but it kicked back in line with bullishness? Doesn't that just make sense? Maybe you're a little bit fooled, right? We did paint contingency plans for this to potentially target sell side if it was to support that. But all throughout this run higher here, I was able to continuously call for buys in the face of this because of our understanding of the higher time frame and the multiple asset relationships. While everybody and their mama was probably on stream blowing their accounts, we were on stream making money. Okay? And I could say that because it's actually true. Okay? But I'm not a financial advisor. I should say I'm making money. Okay? Proving that I can make money. I can't prove that you're going to make money. Even if you follow something I do, you may not make money, which is why I give a disclaimer, because you may make a mistake and so on and so forth. And I'm not a financial advisor. But, you can put 2 and 2 together. You know what I mean? You can make money on your demo account. Right? But yeah, there's a reason that I was able to trust that it was going to go to the buy side still in the indices. And it's based on this higher time frame understanding across multiple assets, all the different conceptual ideas that we've put together today in the last 2 hours. Okay, all that stuff allows us to have the accuracy. But again, if this was the 5-minute chart, you got to ask yourself, if this was doing this on the 5-minute, would you be bullish? If your answer is no, then why the hell are you going to try to shove that on the higher time frame and just assume that shorts are going to end? Why like, other than the fact that you think that this is overly delivered bearish and you want it to retrace maybe up into here. But even that's not being confirmed, because you could see this wick, right? It's rejecting. Couldn't even get to the midpoint. That's a strong indication that we are overwhelmingly bearish, aside from this huge displacement, which, again, those of you that are new, go back to October of last year, you could see that I was calling for buys, okay, all through this, targeting the monthly fair value gap. And then I also called this as a market maker sell model, which we then targeted this and the quarterly fair value gap. I've called bias and narrative for literally the whole entire year, live. And if you want to count my private group, it's been 3.5 years straight, which is pretty insane. Okay. And again, it's a large statement, but it's proven. I put my neck on the line. I show evidence. So there's a lot for you to learn here. We have a small community, right? But we trade better than most of these people that have hundreds of thousands. Or my students just spectators that sit and watch what I do and take my advice or consider my advice. They get themselves to clarity, which is the goal. I can't promise profitability, but I can promise you clarity, and that can get you to wherever you're trying to go. So again, because what I've just mentioned solidifies the fact that nothing is screaming to us that it's going to go higher unless it proves it. What proves it? This bullish order block here holding in price. It would have to stop here. It would have to use this inversion or this quarterly fair value gap high as a launching pad and send price above this level and break through this, right? This fair value or this large wick middle portion. That would then set the stage for us to get up into here. If we get up into here and we could trade through this, that puts my attention up to this high. Unless that happens, I will continue to push for shorts. What does that do to other assets? In this case, the indices and foreign currencies. That will send them higher. That'll continue to push them higher. So I don't care in the face of strong displacement like this. It doesn't matter to me. Okay? It's totally fine for it to do this. It just liquidated traders that don't have the mindset we operate within in terms of trusting the higher time frame. It weaponizes the lower time frame against them because they only think up to tomorrow. Some people don't even think up to tomorrow. They think the next session, some the next hour. They don't have a long-term mindset, even if it's 24 hours. But we do, and the fruits of that show, which again I've made public in the most intense way that I have since having a YouTube channel. This year has been incredible, and I'm going to do this for, for who knows how long I'm going to do this, but I'm going to do it for a while. So hopefully we can help as many people as possible. But yeah, so before we move to the indices, hopefully this makes sense. And again, we start, like I was talking to some of my students about a minute ago, we start from the higher time frames, quarterly, monthly, weekly, daily, and we identify the immediate previous highs and lows from the current candle, previous single candle, or maybe a couple candles prior, as long as they're in close proximity in terms of their highs and lows, because they can be used as targets. They could be used as positioning liquidity. It could be used as the opposing side to smart money trades. Okay? Fritz, welcome, Fritz. I'm glad that it makes sense. Yeah, Fritz, hopefully you've been making progress. Definitely, hit me up with a DM later, brother. I haven't heard from you in a while. Been kind of worried. So let me know how you've been doing. And we can see if there's anything else I can help you with. So hopefully this makes sense so far, you guys. Okay, good. I'm glad, Fritz. I'm glad. Yeah, if you ever have any questions, bro, I'm just a DM away. I can help you in DMs. Try to get to you when I have some time. So you've got this quarterly high. It's also a monthly high, quarterly low, which is also a monthly low. And we're kind of trading back inside this, supported by the downside narrative, which we've just made very clear, and why the downside narrative is to be trusted, and what levels would invalidate the downside delivery. What would change my opinion from bearish to bullish, right? I just basically painted that for you. So hopefully that made sense. So this is all I would really be paying attention to here on this monthly chart. So then we would take it down to the weekly chart. That perspective that I just shared with you from the higher time frame, that mindset, the ability to trust the narrative from that higher time frame, also allowed us to know that this was probably a fake out. I did mention in prior weeks that if this high was to be traded to and closed above, that would be an early sign that we may be overall changing the overall delivery to then try to seek upper targets like I just laid out for you guys. That could be a possibility to the buy side. Because it didn't do that, because it had a huge wick that traded below, and we got the higher time frame context we just talked about still favoring bearishness, this probably faked out a lot of people. I know for a fact it did. I have some students like Tony in the chat who says that he watches some people that are live and compares it to the ones that we do and sees that, they are completely lost in comparison to what we do. We're much more consistent, much more to the point. We are much more accurate, lethal, okay? That's not to throw shade on anyone or toot my own horn, but it's just reality. You can't argue with facts, okay? And I've kind of pushed facts publicly through evidence, and examples, and my students, aside from everything else. I mean, if I was a liar, they'd come out here and all throughout the chat call me a liar, because I'm claiming big time claims. I'm accurate, ridiculous amount over the last year and 3.5 years privately, and I'm hitting it high 88% strike rate, which I proved through the dashboard in Top Step, which I'm also now taking on an Apex account. So I'll keep you guys updated with that one as well, just to prove yet again back-to-back funded accounts can be passed. So I'll keep you guys updated with that as well once we get there. Tony said he's seen it multiple times, no comparison. I appreciate you, brother. You've been with me since the start of the year, and you've seen when I started to really take YouTube more serious and place more importance on it. You've seen me come out like a Ferrari, just flying out the gate week after week after week after week. I'm only live twice on YouTube because I'm pretty much live every single day in my private group, so I attend to them. But even with 2 calls a day, or two calls a week, students like Tony have been able to see that there's just no comparison. I don't care how big my following is or how small it is. I don't care how big anyone else is. You can't argue with facts and proven evidence live. Showing that I'm trading live, showing funded accounts, showing dashboards that show you the receipts of long spans of time being consistent. Most people don't do that. I initially never even felt I was obligated. I'm still not obligated to show the finances that I make, the equity curves, the wins, the losses. I'm not obligated to do that. But because I am a mentor, because I'm here trying to help people, and I teach privately, and I do have a exclusive private group, I am obligated to come out here and prove that I know what the hell I'm talking about, that I practice what I preach, and I'm not just trying to give you a stupid, oh, I think this is going to happen. Oh, this is the trade I took, guys. No execution label, no evidence of a track record, but I'm still, asking you to pay for something. That's not at all what this community is, or me as a mentor. I will not allow that to be the case, because, if someone doesn't provide physical evidence, or at a minimum, go live and show you that they're able to call it, and you can compare it from day to day, week to week, month to month, they're not worth listening to, and you're wasting your time. You're being played, because who's to say that they're not lying if they don't have any evidence? At a minimum, proving that they can do it live, or at least call things before it happens. Minimum. If they're not doing that and they're just making catchy YouTube videos with leased Ferraris and leased cars and rented Airbnbs and probably fake watches that they can buy for $500 that look real, if that's all they pull you in with, you're really doing yourself a disservice. You're not allowing yourself to appreciate communities like this, or communities, like some of the other ICT students that have services that do put themselves out there. You're being played, and it's part of why I came out on YouTube, was to try to combat that and at least do my part to put out the real, so I could save some people, because I was a victim to the fake frauds that have all this lavish lifestyle content. And it's great to build motivation. It's great to kick you in the ass and say, hey, this is possible. But if they have something that doesn't work, it starts to feel like it's not possible. And hopefully here, I don't even gotta say hopefully, because I've seen a lot of students get that hope fired up and permanently solidified, because they see I'm doing it every single week. My private group sees me every single day. So it's undeniable. You just have to do the right things, be able to identify your problems, have someone that can help you find solutions, or find solutions on your own. But it's undeniable that this stuff is possible. So quitting should never be an option. And as long as you follow the rules, don't overtrade and over leverage, and you have realistic goals, you're not trying to buy a Lambo tomorrow, eventually you'll arrive. Who knows how long it'll take? Everyone's different. Which is why trading is difficult, and mentors can't shove you into a mold. Everyone's different. Everyone has strengths and weaknesses, unique characteristics. So you got to be able to figure out what those are for you. And, once you do that, your story will be your story. There's no comparison. And hopefully what I do here and the things that I show you guys, and the organized processes and mindset and discipline and proof I share to you guys, hopefully it keeps you motivated and gets you moving in the right direction, mindset wise, technically, and just overall as a trader. That's my wish, that's my hope, and I'm grateful that that has become a reality for a lot of you, and I'm excited to see who else we can help to change your life. Right? I just look at it as, I help you guys. If I can get you to where you're trying to go, my reach will end up being further. ICT's reach will be even further. The positive impact will branch out even further. Again, like I said, you want to make this bigger than you. That's why I teach, because I'm trying to have that type of impact and pass the blessing forward, So yeah. Stay away from stupid indicators. I don't even care if it's an ICT indicator, unless it's something that notes specific things, right? Unless it's something that notes like time, like all my indicators note time. Okay, it notes a bunch of different things that have to do with structural frameworks and training wheels for some, but consolidates your thinking for others. There's no indicator that's going to tell me the fair value gap I'm supposed to take, because they're going to be wrong. There's no indicators that tell me order blocks to take, because what's the context behind why that indicator is telling you? It doesn't know why. It's just looking for down candles. It's just looking for fair value gaps. There's a bunch of them. Not all of them are valid. Not all of them are useful. There's context that's needed. That's why algorithms are difficult to make using ICT concepts unless you have a high level of understanding. And a lot of people that are 20 years old come out here teaching ICT concepts, They're out here making indicators, fair value gap indicators, inversion fair value gap indicators, and other stupid things that are just, it's going to handicap you. And it's going to make you trust the indicator, and you're going to disregard contextual ideas that are needed to support whatever that PD array is and why it should work out. You know, the higher time frame stuff that we do, it also has an impact on whether something's going to be reliable or not. You know, there's one indicator that I find kind of interesting from one of my friends, Oliver Blanc on X. I think he has an Instagram too, but he's one of my good friends from France, and he has one that has to do with SMT, and I've looked over some of his stuff. I may come out and start pushing people towards that indicator. It's one I may add it to my suite of indicators, you know. So we'll see. I'm doing some research on it. I trust him, so maybe that'll be a resource I can push you guys to. You can go look at it too. I just shouted him out. So his name is Oliver Blanc on Instagram. I mean on X, Twitter, whatever. So he's a very, very good trader. You know, I surround myself, my sphere of influence, I surround myself with some of the best traders I've ever seen on social media. Those that can do 10 times what I can do, and I think I'm pretty good. So anyone that I shout out, it's because they are absolutely trustworthy and worthy of being listened to, you know, in addition to whoever else, whether it's me or ICT, is in your sphere of influence, you know. So, and they got the right mindset. You know, they're not trying to shill things. They're not trying to force you or say you have to do this in order to be successful. Like, you have to buy my indicator. You have to do this or do that to be successful. None of them go by that. They let the results speak, like I do, or like I'm trying to do. Instead of doing all this flamboyant crap. Because, you know, people that see a Lambo and they want to learn from them because they got a Lambo, those are the same people that are going to blame the mentor because they overtraded, you know, and it's just pathetic, you know. So I just wanted to mention some of that stuff. Hopefully you guys get the concepts, why I'm or what I'm looking at and what's going to develop my opinion here. I did mention that this weekly bullish order block here is going to be important. Yesterday we were talking about trying to observe how that behavior is going to be. That's going to essentially determine if it gets displacement above and goes off of this to go higher. That may be an early sign the price may want to start potentially shifting to the buy side if it holds and starts getting above some of these other levels. Okay, and then of course we got that monthly order block here that's up there. So if we get above that, again, it'll potentially end up painting a picture for the quarterly high to be taken, which is in this case, because the quarter's not done, it's a monthly high. So if it holds from that weekly bullish order block within this upper portion of the quarterly fair value gap, it may start to give us signs that we could be flexible and maybe start to seek this going higher. That would then initiate the likelihood of the indices giving a more meaningful drop in the currencies too. Right, so we're still in a mode of watching to see what that's going to do. Overall, though, given the context I just gave for the higher time frame, being potentially bearish on the DXY, or it is bearish for now, given what we see, we're going to continue to hold on to that opinion, see this large run higher as a stop hunt, and then this should not hold if it is going to continue to slide lower. Over coughing my eyes out, or my lungs out. So yeah, we'll keep this in mind here and see if that's going to hold. We're going to use the same idea that we used last week for this fair value gap, or this order block here. If I could freaking find it. Where the hell is where is the damn thing? There it is. Okay, so we're going to have that upper portion, and then we will also have the midpoint outlined too. All right, so yeah. So that's what we'll watch for the DXY. We'll assume that it's going to continue to drop. More contextual ideas for us to use will be not only what we just talked about from that higher time frame, but we look at this daily chart. We see that this is looking like it may be acting as a BPR. Okay, we may get this to have the overlapping fair value gap phenomenon. Okay, which ends up creating a BPR and should not trade back into it. Clearly, that is showing evidence of being truthful and valid. Kind of goes against, well, it doesn't really go against nothing, actually. And then, of course, this will be even further supported if it closes below the middle portion of this weekly bullish order block. As you can see, the whole week last week was targeting that. If you go back on Sunday of last week, I called for that to be the draw on liquidity, and then whatever price does down there will determine whether we're going to try to see price transition to try to start showing early signs of going higher, or if it slides through it, it'll just further confirm that we're going to continue to try to target the quarterly low, in the previous week's low here, and any of these weekly candles lows that are present here, like this one, this one, this one, and then maybe even down to this one. Okay. So yeah, looking at that's from the daily chart. We also have a order block or a fair value gap here. We have one here. We got this delivery up into this fair value gap that has delivered, supporting this as a BPR. Simply just a stop hunt on the weekly, and then displacement, balanced price range creation up here, and then a delivery from there to there. And now we're kind of in this level. We got to see how we're going to open up and how price is going to respect this and use this weekly bullish order block. Is it going to slide through it and close below? In that case, we'll then look to target shorts in line with the monthly chart, which is what we're going to favor. Or is it going to start delivering from here, displace, maybe get above this, maybe even get above this fair value gap in here and balanced price range, which would then set the stage for us to then target some of these upper levels, maybe even start seeing a transition from the decline to a switch to bullishness going into the next quarter in September. Okay, so I don't think that we're going to do that, at least for now. There's a possibility of it because we're trading into that, but the monthly chart and weekly chart is looking like all this was a retracement to then try to continue to drop within the context of that narrative on the monthly chart. Okay, remember, monthly narratives, higher time frame narratives don't change. They're like big ships, and to turn a big ship, it takes time. It takes sometimes weeks, days to turn a ship. So it's the same with this. When you're looking at the monthly, weekly, quarterly charts, those are big ships, and in order for them to change direction, it's going to take time. It's easier for a small ship to turn, like it could whip in circles, just like how the lower time frames can change around and retrace and consolidate and do a lot of stuff very quickly, within a larger narrative. But that larger narrative it takes time, just like a big ship takes time to turn. The higher time frame takes time to turn as well. It needs multiple things to happen, which I hope I've been pretty clear as far as what those things are, because that's our validation process for a particular thing, a particular asset to go in a particular direction. All right. So yeah, again, if you guys got questions, let me see. Quick question: How have you learned to see lower time frame structure in higher time frame chart? Damn, that's a really good question. What has helped you identify it more accurately? Example: higher time frame wick is a lower time frame BPR. In order to help not switch between time frames continuously. Oh man, Fritz, you are on the money about something very, very important. See, intermediate tomorrow. Yeah. So if you go to, let's use, man, that's such an amazing question. That's something that I've talked about a couple of times, but it's something that I try to get you guys to see without me mentioning it, right? So I'm glad that you're noticing that there is a way that we do that. Okay, so let me see if I can find a good example. Like, for example, this here, part of the tactic, I can tell you, like the main idea and how to identify higher time frame PD arrays like once you identify them on the higher time frame, how you can keep an eye and keep like tracking it on the lower time frame without being confused and losing sight of it. The drill that you have to do, so I want you guys to write this down, very important drill right here for you guys to get better with identifying higher time frame PD arrays while you're on the lower time frame, right? Like a daily or let's use a daily, right? Like a daily order block, okay? Let me actually find a better, more basic, simple example. Well, a drill you can do is, for one, identify it on the higher time frame, outline it, right? If you say this is an order block, okay, outline the high and the low of the order block, okay, outline every element to the order block, okay, or if it's a fair value gap, you'll do the same thing, just for the fair value gap, right? But once you identify that, the drill you have to do on a daily or weekly basis is then drop down to lower time frames, right? Maybe you drop down to the 8 hour, right? See what that daily order block looks like on the 8 hour, right? Looks like this ended up being a daily order block, a very small one, up above at the highs. But that's also a bearish breaker on the 8 hour, right? Or the 8 hour and the 4 hour, right? And just study it and then just go back and forth, right? See, okay, that's the order block. These are the levels. Or it's a fair value gap and these are the levels, or whatever the case may be. And then just go down, take screenshots of it and put it in a folder, okay? And then just do this study over and over and over and over and over and over, hundreds of times for multiple different PD arrays from those higher time frames, okay? And then eventually it'll start to stick, right? Because this is one of those things that requires chart time. It requires experience to be able to do it. But a proper experience, doing the right things, and understanding how you need to be observing this to get the best result, to be able to solidify it the best. And again, part of that has to do, or the main thing has to do with obviously identifying them on the higher time frame, mapping out all the important levels, and then taking screenshots and studying how price delivers on the lower time frame within those higher time frames. Because eventually, once you're able to get that pattern recognition down, once you're able to see how price behaves on the lower time frame within those higher time frames, eventually it'll just be a part of your trading, where you'll be on like this time frame and you'll be able to identify the higher time frame PD array, or an assumed higher time frame PD array, without even having to switch to it. You'll be able to see it. Okay, let me see. The 3 charts you have now are a great place to show. Yeah, that's another way you can do it as well. You can identify using a different chart layout. You know what I mean? You can, you could just have the weekly open, identify whatever PD array you're trying to study. Like this wick in here. You can outline the high of the wick and the low of the wick, and then go see what the wick looks like, from this weekly to the daily. That large wick on the weekly was a overlapping delivery from buy side to sell side on the daily that turned around completely, creating the BPR, right? This being a BPR that's also inside this wick shows you the importance of the middle portion of wicks. Because again, this same concept works if you see a 4-hour PD array and you go to the 15-minute to study how that looks. All of that is obviously within the daily and weekly PD arrays, but you can do this same drill time frame to time frame to time frame. It's something that is going to take time to study. It's one of those more tedious studies, but again, if it's something that you think is valuable, which I absolutely say it's valuable to do, then you should, make some time for it. 30 minutes, an hour a day, whatever is comfortable for you, and break that down. Okay? So yeah, that is a very, 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 very important drill. I recommend that you do it. I'm grateful that Fritz mentioned it. The gears are turning, my friend. You being able to ask that type of question, you're starting to learn what questions you need to ask. What questions are going to be the most helpful to you. I don't recommend solely focusing on like the lower time frame, and I try and identify them solely from that lower time frame to the higher time frame, right? Like on the 1 hour, never switching to the daily or weekly, you know, just assuming that you can identify. I don't recommend that you do that. Eventually, you know, you'll get better and able to do that, but it takes time. You know, it's like one of those key, like, professional signatures, like to identify if someone's a professional. If they're able to do that, I mean, they've been looking at charts for a long time. They've been identifying certain things within the context of PD arrays for a long time, because that's not something that someone, you know, a week in will be able to grasp. You know, there's so many other things they got to focus on. But Fritz, I hope that you're starting to figure out what is fully needing to be focused on, what's more important, you know, like what things come before others. And then obviously the process, you know, from A to B, how we identify certain things on one time frame, and then how we drop down and then get to an assumption for what the bias and narrative should be on certain assets, and then how that impacts, you know, what we do later on in the assets like the DXY and the indices. But yeah, very important drill for you guys to go through. It's underneath the classification of like price navigation. Okay, that's a specific category in my private group that I talk about. I have 10 categories of trading plan development, which I've shared the list with you guys to kind of get you guys organized. And I've talked about, you know, how it's helpful. But this question falls in line with price navigation. So yeah, just so you can, you know where to place it in your learning, because there's so many things. There's so many concepts and tactics that sometimes it's hard to figure out like where each thing fits. And that's, you know, part of the reason why, or part of the power behind the trading plan development organization, right? The way that I organize things. But yeah, that question for it falls under price navigation. So it's one of those things that's extremely helpful. And the drill I just gave you guys, if you guys have never thought about doing that, and you've had maybe the same question that Fritz asked, it's very important. Sometimes I'm live on YouTube and live in my private group saying, oh, these consecutive up candles are probably an order block on the daily, you know, or this market maker sell model is an order block on the, you know, the daily, you know, from the 1 hour. It's a market maker model, but it's an order block on the daily. Or maybe it's a breaker, right? Like a good example of that idea, right, is shown over here, right, with this huge run higher, you know, dropping lower, right? If we go to the quarterly chart, that's an order block on the quarterly chart. If we go to the monthly chart, it's a breaker, okay? If you go to the weekly chart, it becomes a market maker sell model, right? If you go to the daily, it's a market maker sell model, right? And if you drop down even further, inside all of this, there's even more contextual ideas, right? And PD arrays that you can break down from, you know, a larger view down to a lower view. You know, like this here, this is a breaker here on this delivery, right? If it was to trade into it again, okay? But if you drop down to a 15-minute, this delivery is probably a market maker sell model. Same with this, right? All within the context derived from this higher time frame order block and the delivery higher to go lower, right? So you can start to see how helpful this question Fritz just asked is, right? Or the skill set that's derived from that question, right? With the drill that I just mentioned, how to study that, right? And why that would be helpful to you in terms of price navigation. Because literally I just navigated price right now, pointing out different things, you know, and it makes sense of price, you know, a little bit further, you know. So yeah, I hope that makes sense. Very, very, very good question, Fritz, yet again. Let me actually do something real quick. I'm going to pin that. It's a very, very, very good question. Okay. So for those of you that have maybe never thought about that, maybe you didn't even know that that's a thing, how you can do that. You can identify higher time frame PD arrays through a specific process on the lower time frame. You know, I gave you guys a quick little drill to help you get to that skill set. Mind you, it takes time. It's one of the more advanced things. It requires experience because it's pattern recognition, price navigation tactics. And, so give yourself some grace. Do the drill that I just talked about. Start from the daily or weekly PD array, and then go to the daily and 8 hour or 4 hour, and then see how it looks. Do that for a week, and then try to do different variations. Find a 1 hour fair value or 1 hour order block or fair value gap or whatever, and go down to the 15 minute or the 5 minute and see how all that fits together and creates that 1 hour PD array. Or like I said, the other time frames too. And keep tabs on where that's happening within the higher PD arrays too. Okay, or where that's at, whatever example you pull out, where that's at on the higher time frames. You always want to refer back to the higher time frames. It's part of price navigation. So hopefully that makes sense. Hopefully my opinions on the DXY make sense. Again, if it is going to give us an interest to want to go higher, it's going to have to break above this and turn this into an inversion. So basically confirming that this weekly bullish order block, let me just note that so no one gets confused. That'll basically confirm that this bullish order block here has now set the stage for early signs that price is going to turn around and bottom out here, and then maybe try to target the buy side. Otherwise, like I said, the monthly chart looks like it just simply retraced back to the breaker candle here that was used to push price through these levels down to the quarterly fair value gap. This just looks like one more attempt, right, to go higher, retrace, hit a PD array or somewhat reasonable premium, to then start pushing lower again. And again, this is also a monthly bullish order block. So the middle portion of that getting closed below is also kind of in alignment with that weekly 50% level of the order block I just highlighted for the last 2 weeks from the weekly perspective. So if it breaks through that, again, it's starting to further confirm that we have no reason to think this is going to go higher. It'll just continue to march lower, and then we'll try to derive whatever else it wants to target once we get down below this. And if we get below this, this order block becomes just that. It becomes an order block. This would become an inversion. So in order for us to then try to go bullish again long term, if we were to get down below this, which I believe we probably will if we break through the weekly bullish order block, if we get down below that, we now have this order block holding. Order blocks create balanced price ranges. Pretty much majority of the PD arrays ICT talks about creates balanced price ranges, right? So if it gets down below that, the mid portion of this needs to hold. And the only way we would be bullish again, if it was to get down below that, would be if it gets above this order block and disrespects it. And then that would again set the stage to get us up to here. Yeah, seeing everything in the context of Power 3 is also extremely critical. I mention Power 3 all the time. Market maker models fit sometimes in Power 3 on the higher time frame. And I mean, it's insane. It's absolutely helpful. Power 3 is another one that has to do with price navigation and framework for the overall daily, weekly ranges, monthly ranges, quarterly ranges, yearly ranges. And so whenever a month starts, a quarter starts, a week starts, a day starts, an hour starts, Power 3 is unfolding, right? Obviously the higher time frames where the real narrative is, but everything works within that context. That's why Power 3 is so helpful, and it's a non-negotiable idea that you have to really get used to, and once you understand that, you're able to navigate. Once you understand how everything overlaps and you get the elements under control and organize your thoughts, like I try to help you guys do here week to week and daily in my private group. Once that stuff's all in line and you know what's important, how to identify liquidity, which is something we talked about today in terms of the highs and lows being identified, and what your first thing should be in terms of annotations whenever you go to any higher time frame chart. Hopefully all this stuff is making it helpful to or making it understandable in terms of what's important, what's not important, what you need to focus on, and how to organize your thoughts. Because that's one of the biggest things with clarity. And remember, my goal when I'm teaching, whether it's today, whether it's a year ago, or every other day moving forward, my goal is to put you in position to get clarity. Because once you have clarity, you're able to truly walk on your own. Whether you become profitable or not, it's going to be your decision off of your actions. I'm not responsible for that. I would have just played a part like ICT plays, in helping you figure out what you need to do, and maybe explaining things in a way that you maybe never heard before, that makes it a little easier, and simplifies some of the topics that are taught in an overly complex way. Because I'm just like you guys. I'm just a normal dude that has obsessed over trading, that wants to help my family, and I study like a madman, and I've discovered a lot through that experience. I've had to overcome a lot mentally, so I have that wisdom to share, which I always do. And so I hope that's been helpful to most of you. I've gotten a lot of feedback, so I know that I'm doing something right. And those of you that are new, if you're new, welcome. We get very detailed in these calls. That's why it takes a while. You don't have to watch the whole video. You could chop it up and skip around to assets that you want to watch if you want, but I don't recommend it, because I talk about everything in terms of process, how I'm able to call bias and narrative for a whole year basically straight, which I've proven live, accurately, and my executions, how am I accurate 80 to 88% of the time this year. I have not dropped below 80%, which I've proven live. I've shown it through dashboards. So hopefully that encourages you to really, really spend time listening to the stuff that's talked about. You're not going to use everything that I teach. You're not going to use every concept and every model I'm good at. I have 4 models. You're not going to use every single liquidity pool that I mentioned. Maybe you will, maybe you won't. But it's not required. You just got to take what works for you. Find yourself within the 10 subjects that I mentioned for trading plan development, and you'll have an undeniable list of proof and experience that'll make it so you can never doubt yourself ever. And the only way you'll doubt yourself is if you break the rules and overtrade and over leverage. Nothing else will stop you if you have things organized like I recommend you guys organize them in. Okay? So yeah, again, I hope you guys have been getting value. Again, don't forget to like the video, subscribe to the channel if you get value. It does a lot for the channel. Shows me that I'm doing something right. And so I hope you guys have understood the DXY. Hopefully some of the things I've just mentioned were either light bulb moments or reinforcing things. Again, thank you, Fritz, for the amazing question. And, the mentioning of Power 3, how important that's been and how eye-opening that has been. That's a good thing to point out as well, because it's part of the foundations. Power 3, higher time frame analysis concepts that we utilize, top down, all the different things included in that. Those are basic things. They're foundational things that can get you to clarity as far as where price is going, and then everything else should fall into place if you have a model that works. And of course, lower time frame requires a lot of skill. Being able to merge the higher time frame perspective to the lower time frame, when to execute, how to execute, what your risk should be, how you determine what your risk should be, what to target, all these different things. Obviously, I talk about. But it takes time, so give yourself grace, and just, keep showing up and you will learn. NFP is not always on Wednesday. There's like a pre-NFP release, and then there's a Friday, non-farm payroll Friday release. So sometimes you'll see an NFP conversation, but then it'll have another one on Friday. Friday is the one that you focus on for the real move. But even then, it's still a 2-stage news event. It'll still, do what I mentioned earlier when I was talking about the differences between the different news events like CPI and FOMC, NFP. Is FOMC and NFP the same? Yes. Yeah. NFP, FOMC protocol is the same. It's the same. CPI, we look at it kind of similarly because CPI is reckless. You don't want to get in front of it, because if you're wrong and your stop is 30 points, 15 points, whatever the case may be, and price just explodes 100 points, you're going to have to eat that. If you try to take an execution right at the CPI open, your execution will probably fail. You'll probably get slippage, meaning that it's not going to let you in because there's nobody to fill that order on the other side, because there has to be a buyer and seller. And this is why demo trading is different than live trading. There's actual real liquidity and pairing of orders going on when you take an execution with a live account with real money. So slippage becomes a problem. That's why we have the risk protocols that we talk about. 1 to 2 trades a day, FOMC and NFP, generally it's 1 at half risk or less. And, we consider not taking a trade towards the end of the week. Although I've kind of, laughed in the face of that and laughed in the face of my own rules, because we've traded CPI after, NFP after, FOMC after, profitably. Okay, so there's ways to do it. But a good rule of thumb for a new trader that's learning, if you're not profitable yet, and you're not disciplined enough and confident enough in yourself that if you took a loss, you wouldn't worry about it. If that's not where you're at, it's best to just consider what I'm saying and try to study how the behavior is. I've traded and watched hundreds of FOMCs, NFPs, CPIs, rate announcements. So I've been here in this water before. So I know how to behave, and I have rules based on my experience, and of course advice from traders that have been in the game longer than me, that trade ICT concepts. So yeah, risk would be cut in half. Yeah, exactly. Cut in half or cut to 0.25% of your normal risk. Is no news days and those news events the same for risk? Good questions. No news days are low probability conditions. You can trade them like they're the same rules. It's up to you if you want to keep it simple. But I generally just, cut my risk by half, or maybe sometimes just by 25%. I cut it. So I'll have 0.75% risk instead of half, or instead of 1. It would just be 25% less, because it's not necessarily the worst days. Sometimes things will show up. Things will occur. Okay. But it's just less likely. Why? Because there's no manipulation. There's no intervention. There's no institutional sponsorship for the most part. Sometimes there is. There's the one-off times, one-off weeks that do have the large moves that set things up that are worthwhile. But it's not all the time. It's just good to classify it as low probability. For one, it's because ICT has mentioned it as such. And just based on what I've studied, what I've seen through experience, it's definitely a rule or a perspective to consider. And depending on how you feel about yourself, your risk, appetite, how you want to move within your trading business. Obviously, that's going to shape your overall end game opinion. But if you're going to take my advice and take the things that I've been talking about, how I operate, 1 to 2 trades on that day, very light risk. Don't force things. If it's not there, it's not there. Be okay with missing the move, either half risk or 0.75% risk of your normal risk idea. And just aim for 20 to 30 points. It's kind of typical. It's kind of what we do all the time anyway, no matter what the condition is. But it's kind of how it is. Or if things are cracked in correlation, if we're in consolidation, if overall we're in a sideways market where it's overlapping higher time frame levels, if we're not doing much and all that stuff is overlapped with no news, but there's news on like Wednesday or Thursday or Friday, expect that that's being used to hold you in position, to build sentiment and consolidate and basically distort time, so people would just get impatient and try to get in early. Small ranges lead to large ranges. So that scenario could lead to a big move happening during the news. So it's probably best in that case to wait for the news to come out later on. Okay, this is what I have. No news equals 0.575 risk. Remember, that's of your normal risk. So maybe your normal risk is 0.75%. Whatever dollar amount that adds up to, based on your account size. If that's your set starting risk, you would then take half of that risk or a quarter of that risk. Does that make sense? I hope that makes sense. It's not always going to be 1% for everybody. I don't recommend 1% for everybody. If you're just learning, people are going to not take that advice and whatever. But I just want to make that clear, so you guys can know my opinion. But yeah, the one trade max. Yeah, beautiful. You being able to set a risk rule like that, Tyler, You being able to submit to that so early, you've been trading less than a year, like actually focused, right? You being able to understand that that's okay, that you don't need to worry about missing a move, having that peace of mind, having these things organized and focusing on organizing this stuff, that shows me that I'm doing what I'm supposed to be doing in terms of a mentor. I'm giving you the right advice, especially, since you're my brother, right? And I'm trying to teach you the best way that I can. Of course, I'm sharing the wisdom with everybody too, to try to help, everyone. But it shows that I'm telling you the right way to be, and your calmness with it, your lack of combative behavior towards it or combative perspective. It really shows that what we do here is amazing, and I'm really pushing you guys in the right direction, and I'm grateful to see that. I'm grateful to see how you're progressing. But yeah, mentioning kind of what you're talking about there, that's perfect. I like that. That's wonderful. You're first of all submitting to the fact that you don't need to be greedy. Okay, you're accepting the fact that low risk tolerance for now is something that you want to deal with. Maybe you change that down the line. Maybe you don't. Either way, it doesn't matter. As long as you at least keep it limited in this case. If you become more risky, maybe you have an account that you eventually want to be more risky on. Maybe you risk more. But if not, you could live right there where what you just mentioned. That's my exact risk model. That's what I do. That's exactly what it is. The space you sent yesterday, help with psychological part of all of them. Every single week I share in my private group a Twitter space that I want everyone to focus on. So I do that for a reason. I'm me, right? I'm one mentor, but there's still things that you got to be able to take to heart from ICT. I have my wisdom, my perspective, my experience that I share from my view. That's personalized to me and how I view things, and how I employ things. But when there's things that ICT mentions that I think should be listened to, regardless of me being the mentor or not, I don't have an ego to say, oh no, it has to be straight from me. I don't just take what he says and just try to act like I created it. If there's something that I'm going to share with you guys that's going to be beneficial, especially for the psychological studies portion of my private group, I'm going to share it. And I have a whole section for that. Those of you in my group already know. But yeah, I'm glad that helped. Are you talking about the short one that was like 30 minutes, 40 minutes? But yeah, every single week there's a psychological lesson. Yeah. Okay, perfect. Of course, next week I'll probably let a lot of y'all resonate with the one that I sent yesterday and last week. I may send another one every single week. I'm sending things out to you guys, but I'm also studying it. Because you'll never be good enough unless you hit your goal where you're trying to get to being rich. Not having to take a trade ever again. There will always be something for you to study. Once you get the technicals down and, you get the psychological parts down enough to be profitable, there's now another level that you're going to have to go through. Okay? Because now what if you got to size up? What if you're trying to increase your size? What if you're trying to target further targets? There's new levels. What if you get a larger account, and you're trying to learn how to trade that? There's new levels that come all the time. The principles don't change. The rules and processes don't change, but the trader does change, right? The outcomes potentially change. The value your trading has to your life will change. And so psychologically, you have to be prepared for those things. And you got to be prepared for, you getting to where you're trying to go technically and mentally, and then facing something that goes wrong. Maybe you get smacked by the news and you break a rule, How are you going to be able to overcome that? Is that going to make you spiral out? Are you going to now doubt yourself? Right? Is something going to happen potentially in your personal life where your mindset's going to be thrown off a little bit? How are you going to deal with that? All those types of things ICT talks about in the videos that people call boring. But it's ridiculous. If there's a master that understands like what you're trying to learn and is where you're trying to be, You got to be very slow to discount things that are said, and kind of just deal with the way that the messenger sends things. The way he, speaks in some cases, it kind of turns people off, but, he deserves a lot of credit. He's said before that when you achieve what you're trying to achieve, you deserve the credit because you took the risk, you studied. And there's truth in that, and I believe that. I know that I got to where I'm at today, aside from the ICT lessons and learning. I know that I got to where I'm at today and will get to where I'm going because of my own effort, because of my willingness to be disciplined, my willingness to submit to the process and not beat myself up if I do it wrong, give myself grace for being imperfect. I hit things at a high level, but there's still 20% of the time that I get it wrong. There's still times when I'm not perfect. There's still times when I'm not feeling right mentally because I got a lot of shit to deal with. And the only way that I'm able to overcome that is by sharing the things that I share with you guys, organized processes, keeping realistic goals, focusing on the right things, making a plan for things, organizing, what you're going to do during NFP, FOMC, organizing a process behind, how you're going to manage your mindset, mastering the models that you use, how those models fit within the different concepts when we're looking for bias and narrative, making it so organized that it doesn't matter how you feel. Every single element is accounted for. So then if something does happen in your life, you're still able to make good decisions, emotionless decisions, even if you feel emotional, even if you're excited, or depressed or something happens or, whatever the case may be. As long as you have a process in place, as long as you have everything organized, how it's supposed to be organized, and you have all these different things planned for, winning streaks, right? This is something most people don't think about. What happens when you go on a winning streak? I've talked about before. How do you manage the highs and lows? If you go on like a 10, 20 trade winning streak or 5, 6, 7 trade winning streak, how are you going to feel? You're probably going to feel like you're on top of the world. So what are you going to do to protect yourself from that? Sounds kind of strange, doesn't it? But why would you need to protect yourself from a win streak? Well, your mindset is so inflated at that point, especially if you're just finding yourself, that you're going to be aggressive. You're going to overtrade. You're going to over leverage, unless you have a process in place to deal with that. My plan for when I have a win streak, I take 2 or 3 days off. This year I've implemented Saturdays as my day off. So I'm not even thinking about the market. Unless I have a one-on-one that comes, like a student that needs my help. That's the only thing I'll be able to focus on that comes to trading. I get on and glance at it, but throughout the day, I don't even think about it. It's my plan. That separates me from being too tied to the wins, like a good week. It allows me to separate. And then, of course, I come back on Sundays and I do what I got to do. But then what about losing streaks? What if you take a 4, 5, 6, 7, 10 trade losing streak? That doesn't really happen a lot here. You guys that have spent time with me know that, most of the ideas I send out are succeeding. We're always on the right side of the market for the most part. Not 100%, but most of the time. So, what happens if you take a loss? Or have a streak of losses after you just had a win streak? Are you prepared for that? What are you going to do? Do you have a plan, like dropping your risk, giving yourself positive feedback, planning for a loss? If you go on a win streak, plan for a loss to come. So then when it hits you, it's not a surprise. Don't intentionally go and try to lose. Some people might need to do that. I just need to go in there, throw a small loss real quick just to, ground myself real quick. You don't have to really do that because a loss will come. Even ICT takes losses. But when you take those losses, especially after a win streak, do you have a plan for that? Are you planning for these types of scenarios? Are you planning for if something bad happens to you, how you're going to be able to react and still be able to make decisions? Especially if you're a full-time trader, this is more important. Or if you aim to be a full-time trader, this is even more important. You got to plan out for these scenarios. This is the boring stuff. Like, think about it. I just had like 12 people on, and now 6 have already dropped off when I started talking about this. Those 6 people are going to be the same people that blow their account. I've had 116 people join today. A lot of them hop off because I start talking about things like this. But that just shows you the statistic. Think 9 out of 120 people, or 6 out of 120 people, 7 out of 120 people have remained, like, consistently. Think about the trading statistic. This is why people fail. Like all the stuff that we've talked about, those of you that have been here the whole time. I mean, it's invaluable information, you know? But if I'm not talking about an execution, if I'm not talking about the asset that they want me to talk about, they don't find interest. You know, those are the same people that don't have plans for the things that we just discussed. They're the same people that will take one loss after a winning streak of 5-10 trades and then blow all their funded accounts. You know, that's the problem. You know, that's part of the issue with a lot of traders, and it's unfortunate. You know, and I try my best to get you guys, you know, what's needed. But you know, not everyone's going to be saved, and you know, I've submitted to that. It's unfortunate. I wish that could be, it could be changed. It could be different. But you know, it's just the way it is. You know, the statistics show, not only in who sticks around when we start talking about this type of stuff, but also just the overall statistics for trading in general, whether you're an ICT trader or not, you know, or claim to be or not, you know, because the mindset, the psychological things, the human nature, right? The TikTok brain and impulsiveness, okay? That is the type of stuff that's going to wreck people. That's why the percentage will always be 95% of people fail in trading. But not here. You know, you stick around and you listen to the things that we talk about. If you really take ICT stuff to heart, you watch the boring stuff, you put in the work, you do the journaling, you consistently get up whether you feel like it or not. You submit to discipline, you plan accordingly. That's the stuff that the 95% aren't doing. And that's why the 5% that do will succeed. All right. But yeah, so hopefully some of this stuff is helpful. I appreciate you sharing, Tyler, your breakdown. Any of you guys that, you know, hear me talk about a process or mention some stuff or advice, feel free to leave your stuff in the chat. I feel like what my brother just shared right there is amazing, because now some people that maybe don't have a plan now have a plan for NFP protocol and CPI protocol and FOMC protocol and rate announcement protocol. Okay? You know how you need to manage your risk, or no news days, right? So all that stuff's been discussed along with everything else now. So I appreciate you, Tyler, for sharing that. Anyone else that feels like, you know, you guys want to share stuff like my brother just did, feel free to do so. It's highly encouraged, because then not only do I get to see what you guys are thinking, what you're doing, it also you know, solidifies in yourself that, you know, what you're noting down in terms of a process is something worthwhile. I'm trying to do something here and it won't let me do it. I don't know why. Why is it not letting me do it? Oh, whoops. That's why. So yeah, for those of you that maybe don't have a process, there is a good process. Appreciate you guys bearing with me for this long. We've had a lot of stuff we've discussed. Mind you, these aren't little calls where I'm talking about one thing. I'm talking about a whole process to prepare for 5 straight days, sometimes 3 straight months, or month to month, or, you know, week to week type stuff. So there's a lot to cover, you know, but hopefully, well, I don't even got to say hopefully, because I see a lot of you guys that have stuck with me for the last couple months, or even that are new, like Mike, who's now in my private group, who started from the YouTube channel. You know, you guys are showing me a lot of progress, and again, it just shows me that I'm doing exactly what I set out to do. So I'm really grateful and humbled by you guys, you know, feeling open to sharing things with me and putting your trust in me. So just hope you guys know I'm grateful just as much as you guys are. For me, I'm grateful for you. Okay. So yeah, hopefully everything makes sense. Hopefully you guys took some value from what I just mentioned and all the stuff from the call today. But in terms of the NASDAQ here, we'll fly through this real quick. If we look at the monthly chart here on the monthly chart, we see it there too, monthly and the weekly. But if we look at this monthly chart, we could see that there is a discrepancy here in terms of correlation. So there was an SMT at the lows in there, right? So if we take it to the weekly chart, we see the failure to break into this fair value gap, failure here too, but it broke into it here on the Dow. So that's a fair value gap, bullish SMT. Okay, not only that, we had DXY racing back to the downside after it gave that impulse, which we just talked about how DXY showed us from that higher time frame monthly chart that it's favoring downside. Even in the face of it running higher, there was still no reason for us to think that it was going to go higher unless it broke some of these levels on a more long-term basis. This simply just retraced back to a bearish breaker, back into the wick midpoint, and then has basically turned around and started its run lower. Now we're watching the weekly bullish order block to see if it'll further confirm and go lower. Again, if that's the case, considering that while we're looking at the three indices in here, we see that the SMT was present, like I just mentioned. And if you think about our validation principles, the way that we validate what's happening and whether it's going to hold or have a likelihood of turning around to go the other way, there's no 3 PD arrays in here that's been violated. Just like how I mentioned earlier and have been mentioning more commonly in terms of validation and validation, if this was the 5-minute chart, okay, if you saw this on the 5-minute chart, is this bearish to you? Would this delivery down here say, oh, it's topping out, we're going to go lower now, it's going to go all the way down here? Would that have been a bearish thing to you? Or is it going to be just a retracement to go higher? You know, I've mentioned this since it started delivering, that it was simply just a retracement to go higher. There was a possibility for it to reach to this fair value gap. But like I said, I mentioned while it was happening that there was an SMT at the fair value gap. So it would probably deny the fact that, or deny the likelihood of it going down into there because 3 PD arrays haven't been changed. I even said as well last week that if price was to get down into this fair value gap, long-term bearishness would only be on my mind if we took out this low or simply closed below this and used it as an inversion. That would set the stage for a long-term bearish trend for, the next couple months. It would change the overall narrative. But has that changed? No. Has that happened? No. Right? Was there something continuing to confirm that buy side was going to deliver? Yes. Not only here, but in DXY. Okay, so what was our opinion? Our opinion was that this was going to continue going higher. And then as you could see by some of these details, I went through all this stuff in my private group, but there was a 8-hour fair value gap in here when it hit that low and solidified the SMT. Price displaced, overlapped this. I mentioned we have to watch this and see if it's going to reject there. If it doesn't, it'll likely be turned into a balanced price range inversion fair value gap that would send us back to the buy side given the SMT I talked about from that fair value gap. Right, we also talked about this low to that high. This, if it was going to sell off, it should have held as a bearish breaker. Right, it should have held as a balanced price range bearish because it's also an order block. Right, well, not necessarily. Right, it didn't really manifest an order block on that daily chart. But nonetheless, right, low, high, lower, low. All that was a displacement to try to unseat these traders from a previous week's low. Yeah, from a previous week's low. And they use that to then trigger the run higher off the heels of the monthly SMT or weekly SMT. And then once we cleared this, right, a balanced price range was created. This phenomenon called a type 2 dealing range, right? We also watched this high. I said that if it broke above this high, it will most likely have a free ride up to the highs up here. This also was a market maker buy model. Okay, this low to that high, this delivery, selling off to the previous week's low, attempting to get to that previous week's fair value gap on the weekly chart. This delivery in here was a market maker sell model. Okay, and then like I said, this was a market maker buy model after we secured this liquidity, because that's where they paired smart money buys off the heels of that S&T on that weekly chart, which again, this was further confirmed with price hitting into this, right? Staying above this inversion fair value gap. After stop hunt was taken, after S&T was formed, and then delivering up above this, created an order block. This high to that low created another balanced price range. We had a rolling BPR overlap of fair value gaps in here. All right. And the price just continued to press higher using these levels. Notice how it left part of the fair value gap open? That's because this high to that low is a balanced price range overlapping the fair value gap. So it didn't have to go down there because it was already efficiently delivered. And we're still in a buy side narrative, and DXY is still bearish. So everything is still in alignment in the face of this huge manipulative downside delivery. And how were we able to trust this and continue to trust and stay in line with the right side of the narrative at a high success rate? Because we understand that higher time frame. You know, because of course we have these other little tactics in here like type 2 dealing range characteristics, balanced price ranges, intermarket relationships, the S&T at the fair value gap, you know. I mean, you could even think about power 3, okay? If we think it's going to still continue to be bullish, you know, the open for the month was down here, right? Open, delivered a little bit lower, rallied up, right here. So small manipulation, but this huge decline from July set the stage for them to come out the gate in August and just start ripping their face off to the buy side, especially because that was also in alignment with this higher time frame framework. And you notice the large reaction off of that higher time frame framework, that higher time frame PD array, that higher time frame scenario, right? Higher time frame leads to big movements, right? And then the lower time frames build the storyline that is this higher time frame. Right? So moving forward, right, after we just kind of reviewed this, right? Moving forward as far as what we're trying to see price do now. Okay. Let me actually remove that. It's already kind of known that that's there. So now we got this as a bullish order block. It's also a new week opening gap, but it's also a bullish order block on this weekly chart. So let me actually paint that. We're almost done, guys. I know I've kept you here for a while. I appreciate your patience and attentiveness, like willingness to stick here. And again, hopefully you guys have gotten value. You know, and we're going to go into this coming week providing yet again more evidence that what we do here is unrivaled. And those that aren't patient, that aren't paying attention to detail, those that want me to give them only signals, those that want me to come out here and tell you that one thing is going to make you rich, you know, they're going to just continue to just sit and spectate and watch us crush the hell out the market every week for the rest of the year and the years to come. It's been 3.5 years I've been doing this exactly like this, but this year has been the most dynamic. It's been the largest year I've had, the most accurate year, you know, high 80s. Max was 88%, you know, hovering around 80 and 83% right now in terms of execution, which again, I'm going to showcase in the Apex account when I'm done, but I'm in no rush. Okay. But yeah, those of you that have stuck around, hopefully you begin value. Maybe we have a 60-day left from quarterly start. Yeah. So I think that we've already given the quarterly shift to the buy side. The quarter's already almost done. September is going to end the quarter. So we're in, you know, kind of close. We got one more month till the new quarter ends. or till a new quarter begins and this current quarter ends. I think that all the delivery that was set for the quarter in June, I mean, you could see what the whole quarter's done, right? If you go to June, June 16th, or the month of June was when the third quarter started. And you could see that we basically came down here, right? This was beyond the 20th day, June 20th, right? You start the IPTA, look back, cast forward, 20, 40, 60 from June 1st, right? You cast forward, and it's ironic that the big move initiated to the buy side again after the 20th day. Okay, you could see right after the 20th day. Remember, between the 20th and 60th day, within the start of the month that creates the new quarter, which in this case was June, within that 20th and 60th day, it should be able to give you a shift. It was consolidated going into that. It rejected lower, and then all of a sudden, bang, it shot up. Quarterly shifts don't always mean it's going to shift against what was happening, right? Sometimes a quarterly shift can be a continuation, right, after it's stalled out a little bit, right? And I mean, you could clearly see that that was the case, right? So my brother said for order blocks like that one, order blocks like that one on the weekly, would it have to only print above the wick or just the body? It would have to trade above the high. You know, I need the whole entire thing to be encapsulated. And then once it gets above that, if it trades back down, ideally, because order blocks create balanced price ranges, if it's going to be effective and very dynamic, I would not want to see it trade below this range. If it did, right, it's still valid, but it would have only up until the middle portion, and it would have to close above it. It can't close below it. If it closes below it, that's a red flag. We may look to target the deeper sell side liquidity, and maybe even this. But I think that the S&T here and the behavior we see shows that we're still going to continue to push through. So we'll see what happens. Right? So yeah, we will see what happens within the context of that. Again, DXY, we got to wait and see what this weekly bullish order block is going to do, right? And all the other elements, obviously, higher time frame monthly being bearish. So with that being the case, that supports this continuing, plus the SMT that I mentioned. Let me actually mark that. Some people probably don't notice it was there. So yeah, there was that FVG SMT on the weekly chart. Okay. So yeah, with that being said, we have this, right? We got this bullish order block, should be able to hold above it if it can trade above it. We'll see what happens when we open up. If it does get above that, right? We got this high to that low. We should not be able to make it past the middle portion. And like I mentioned last week, this is in fact delivering a market maker buy model. Consolidation, accumulation, reaccumulation, smart money reversal. Okay, first stage distribution, second stage distribution, and it should quickly move. I mentioned it should move quick up here, but it gave a little deeper run simply to return back to the daily bullish order block. So now we should have a very fast-paced run. It shouldn't have to spend too much time not getting up here. It's so close. Since we're already well into a premium based on this whole entire range, if it is going to go higher from up here because we're so deep into a premium, don't expect deep retracements. I don't believe we'll have a deep retracement, assuming that we're going to continue going higher. Okay? So, yeah. Yeah, especially if it respects the consequent question of the order block. Yep. I agree, Fritz. And then we got this high to that low. I talked about this in my private group. We were calling the move. We called this whole entire move. We called like 8 opportunities live on this day. Of course, I don't take 8 trades. I took 2. And some of my students were able to take it as well. I think Mike was there. Mike in the chat, if he's still here. Mike Koza. It's one of my private students. Started here on YouTube. Yeah, any of you guys that are in my private group, if you're on right now, I think it would be much appreciated if, from time to time, if you could kind of let this community know what the difference is. Pretty much the sole difference, at least from my perspective, is the fact that there's more access to me every single day, literally. So real time, every day, even if we don't take a trade. And you just get to see what I do on a daily basis. You get to see me justify what I do here on Sundays. And you just have more support. You have more people around you that were starting on YouTube and then came to me and then started seeing things open up. But some of you guys aren't going to need that, unless you want to, right? If you're already making progress, if you come to the private group, you'll make more progress, right? But because there's just more access. It's just more resource, more live calls, seeing this stuff done over and over and over. But then again, I have a lot of students succeeding on YouTube too, passing funded accounts. Tony passed like 5 or 6 funded accounts this year, just since his time watching what I do. The analysis and help is triple the amount in the private community compared to YouTube. Yeah, I'd have to agree. It's just more. It's a lot more attention to students, because they're there with me on a daily basis. We build a stronger relationship. The whole community helps each other. The YouTube channel is good too, right? And I know that some students aren't going to be able to afford it. Even though I'm the lowest priced mentor that gives the most time out of the whole industry, that's the most effective. I can outtrade 99% of these people on social media who rent their Lambos. But even with that being said, there was still, it's still maybe a barrier for some. And that's why I do as much as I do here on YouTube as well. But yeah, So I hope it makes sense as far as what our opinion is here. Appreciate you hopping on, Fritz. Hope you got value as always. Of course, let me know if you have any questions, brother, either in the comments or in DM, and we'll see what happens. And good luck next week. I'll see you on Tuesday. But yeah, so hopefully everything up to this point has made sense. We've talked about a lot, right? It's a longer call than normal because I've talked about a lot, and I wanted to make sure I took my time on some of this stuff. Because it's so important, And I've had a lot of people hop on today, and a select few that have stuck around the whole time. And those select few are the ones that get the most results, ironically. So, it's the trade-off. That's reality of the trading industry, right? And I'm not flamboyant, so maybe it's not entertaining, but whatever. But yeah, so those of you that are still here with me, that have been with me throughout the call, does everything make sense? Do you guys have any questions, any last-minute questions before we put a ribbon on it and come back tomorrow for those of you in my private group, but Tuesday for you guys on YouTube? I'll mention some stuff as I do in the free Discord as well, like markups and what I'm looking for and stuff like that. But yeah, before we put a ribbon on it, do you guys have any questions based on the vast amount of things that we've talked about, or questions about the NASDAQ? Just want to make sure I ask before we put a ribbon on it. Makes sense. Nutty Fafa. Good. It's always good to hear. It's always good to hear from you too, brother. It's going great. It's going to be a great year. Yeah. Wait till September comes in. Wait till this next month comes in and we get the hell out of the summer months. Even though we have been absolutely destroying the summer months, like we've been in line still to this very day through some of the hardest. Mind you, ICT mentioned too, I think back in March, same as he mentioned when COVID was happening, or whoops, the virus was happening. Can't say it because they want to censor people that say that on YouTube, which is the strangest thing I've ever seen. But yeah, the virus. ICT was talking about how these are the hardest conditions he's ever traded in. And he also mentioned in March of this year that it is the hardest situation to trade in, even in comparison to those times. It's now even harder. Yet this year we have made it look easy. You know? So, I mean, with him saying that, I mean, just puts us at a even crazier level. You know? And it is different. You know, from what I've seen, it's a much, much different year. Much more different year, much more volatile, much more ready to shake you out, ready to fake you out, ready to hold price and then rip people's face off and not come back. So, you know, there's been a lot of manipulation, lots of announcements, lots of federal changes, lots of this and lots of that. But again, that presents us opportunity. And as you could see, those of you that have been with me, you know, when you're able to see things the right way, when you know what you're doing, doesn't matter what condition you're in. Doesn't matter even if it's NFP. I don't encourage you guys with this statement to trade NFP, but even in NFP, pretty much every NFP day, I think besides one throughout this year, I've traded profitably. Live with my private group. You know, so, and they have too. You know, I'm not the only one. You know, it's becoming a bigger and bigger and bigger group of people that were struggling. They come to us, they look at how I structure things, they hear my advice, and they're becoming successful. You know, or consistent, right? Successfully consistent, I should say. I can't guarantee profitability; it's illegal. But yeah, it's still a whole quarter left. 30 points is going to change. Yeah, 30 points is going to change your life, my friend. Tony, you're one of the students that has followed every single thing that I've said. Everything I've mentioned, you've applied. And if it doesn't make sense, you didn't apply it. But most of the stuff, most of the changes, perspectives, mindset, rules, technicals, right? All that stuff that you've applied, since you've been with me, you have expressed that it's changed a lot of things. And I mean, people like you are just a testament to what happens when you focus, listen to good advice, and have a person here that shows you that what they do actually works and proves it that it actually works, and then proves how you're supposed to use it so it'll actually work, right? And then all the intricate details in between. You know, it's just a testament. Students like you are a testament to, you know, what happens when you have a good mentor, when you're around people that truly know what they're doing. You know, you could spot it really quickly. And most of these idiots on social media have no clue. No clue at all, especially if they're risking 20, 30, 50, 100 contracts doing this, doing that, and they can't even show it live. They're trading demo without saying anything ahead of time and still not going live. But they're still selling you something. I mean, it's unbelievable. It is. It's truly amazing. But yeah, guys, I think I've talked your guys' ear off enough today. We've talked about a lot of things. It's worth watching the entire call. It's, you know, you could try to hop around to the assets that you want, because you could just skip ahead and you could see where they're at when I talk about specific assets, because I spend so much time on each asset, giving it the time that they deserve. And all of them work inside this big picture that we have that paints the narrative for us. So bias is bearish on DXY overall, in a nutshell, given all the background stuff until proven otherwise with our invalidation levels. And bias and narrative for the indices is bullish. Okay? And we're going to open up the week, try to see if there's going to be little to no retracement, because we're so close and so deep into a premium with a clear level. So it may not have to retrace too deeply. So I'm expecting it to get up there. Now, what happens when it gets up there, obviously we're going to have to see. If DXY is still raging to the downside at that time, then we should be able to see a pretty solid run to the buy side. But if it takes that out, that's a higher time frame liquidity pool. It's an all-time high. So I wouldn't be surprised if they try to give some type of rejection, but we'd have to see. And we don't pick tops, so we would let it print, let it displace away, and then try to frame out something that makes sense going lower if that shows to be something of interest. Otherwise, we'll continue to push this higher until proven otherwise. And yeah, expect power 3 to take place. So some kind of manipulation to open would make sense. Then drop down below, maybe sweep this low out because everyone's stop has been rushed there. If you had all this profit, your stop would probably be rushed up there too. So thinking of power 3, if you're trying to get us up to this where there's liquidity resting, if you wanted to engineer losers, I mean, it's reasonable to get down there. They don't have to. They just simply have to trade a little bit below the open price to create a down wick and a bullish candle for the week, and then they can accelerate once they do that, right? So if we get a little bit closer, just last thought, we do have this here. Ignore what this looks like right now. It's not really going to be too useful. It's generally the day of, like middle portions of the week that is this as important. And then we got this fair value gap, and we got this swing low, and then we got this as an order block, right? This high to that low, also a breaker, and you can see how it was respected. So as long as it stays above that, it could come down and sweep this out. In my opinion, will still be bullish, especially if DXY is falling. Okay, DXY may want to punch up a little, sweep this out, but then overall, I want to anticipate us potentially targeting further downside. And we got equal lows here. We got relative equal highs up here, but I don't think they're going to come up there. I think we'll stay below this orange box here, which is a fair value gap, I think. Yeah. Okay. So yeah, again, I hope you guys got value. Thank you for hopping on. Thank you for all the patience and time. Hopefully you guys were able to learn something. If you got any questions, let me know. Don't forget to like the video, subscribe to the channel if you haven't already. If you like what I do, we do this every single week, Tuesday and Sundays. Sunday's a prep call like we did today. Tuesday is it's a live trading call, basically putting everything together. And yeah, don't forget to follow me on Instagram. Don't forget to hop into my free Discord if you're not there already. I do have a private apprenticeship group if you want to join that and be live with me every single day. You know, if you like what I do here, like one of my students said, my little brother actually said, the analysis and help is triple the amount, and it's much more supportive and personalized in the private apprenticeship community versus the YouTube channel. Because we only have so much time here on YouTube. Okay, so yeah, definitely consider that if you want more help, if you like what I do and want to become even deeper part of the family. If you're part of just YouTube and that's where you stay, you're just as appreciated, and I love and appreciate you guys for the support and the attention, and I hope it helps you as much as it has helped many people. Just look at the comments, look at the previous videos, look what people say in my testimonials on YouTube, on Instagram. I mean, it's insane. It's humbling. It's so many people. Okay, so I'm sure that if you spend time here, give me patience, give yourself patience, and truly want to learn, you will find a home here in the WMG trading family. Okay, so yeah, with all that being said, any links for those types of things are down in the description. And yeah, with that being said, hopefully you guys have a good rest of your weekend, and I will catch you guys on Tuesday here on YouTube for our live trading call of the week. And I will catch you guys in my private group tomorrow, bright and early, at 6 a.m. Yeah, 6 a.m. because there's no news, right? So yeah, God bless you guys. Appreciate y'all, and have a good rest of your weekend.